need a nap.
Oh, yeah. All right, everybody, we are live. Good morning. Welcome to Saturday morning's budget hearing for October 30th, 2021. Please rise for the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Clerk Brady, roll call, please.
Trustee Vogel?
Here.
Trustee Papantos?
Present.
Trustee Vito?
Here.
Trustee Lang?
Here.
Trustee Kruger?
Present.
Trustee Rufato?
Here.
President Horker?
Here. Clerk Brady, citizens' concerns and comments?
And no, not today.
Off to the meat of the matter then. We have the budget discussion for 2022. Mr. Svondillis, you have the floor.
Thank you and good morning, everyone. Happy to be here. Happy to be back in person with some boundaries and masks. Nonetheless, it's good to be together discussing the very important topic of the fiscal year 2022 budget. So with respect to everything that everyone has gone through locally and globally, I say that 2021 has been quite a challenge. Expectations for service have been up, resources have been down, but through all of that, we have not only maintained, but I would say that we have thrived through the last 18 months. We began 2021 with a rather significant budgeted deficit, and I am beyond proud to say that we are ending fiscal year 2021 with a surplus. And this morning we are going to present to the board and to the public a balanced and even surplus budget for fiscal year 2022. And how did we do that? We did that by having and maintaining solid financial plans that we remain committed to and have remained committed to through some very difficult times, and being adaptable to changes needed not only for the village's success as a municipal entity, but also for the residents and businesses of our community. We are lucky to have a board that is willing to recognize the needs of the community and pivot when necessary to do what is necessary to keep those businesses afloat. And we have a staff that is prudent with public dollars and diligent in finding ways around the cliche of doing more with less. So I would like to thank the board for their leadership, their consistency and focus, and I would like to thank staff, not just the people sitting at the department head dais, but the team that supports them. Without their efforts, we certainly wouldn't be able to present such good news to you this morning. So as I said, we are presenting the 2022 budget that is balanced with a surplus today. It is the 6th of the last 7 balanced budget that we presented to you, 2021 being, of course, the exception. And with that setup of all the good news, that doesn't mean that there aren't challenges. You will see, be provided some information this morning that shows that over the last 10 years, the Village of Wheeling has very little growth with its revenues. And that is a significant challenge when the expectation for services continues to increase, as well as our expenses continue to increase. But there are a lot of opportunities. Some are new that you'll be hearing this year. Finally, the Level the Playing Field Act has gone into effect. And we are seeing the benefits of that. We have a dispensary that has opened. We are beginning to see the positive effects of that. Consolidation of pension funds is happening. So there are some significant opportunities. As far as the budget process goes, Director Monchain and Deputy Director Smith, I'm sorry, Kaplan. I'm so used to it. We'll be presenting the meat of the budget as well as the process, but as you have heard from me before, I think it's important for the public to know how we got to where we are right now. So several years ago, the village instituted a liaison program wherein an elected official is assigned to each department. And the purpose of that assignment is to have the elected official sit with the department head, review the operating budget in detail, and ask any questions and have any discussions that are necessary in order to come to this meeting and represent that it is a good budget. So all of those meetings have happened. If anybody has any questions, we can, on the general operating budget, we can discuss them now. Anybody have any issues they'd like to discuss over the general?
Lots of no. Right. Awesome.
Okay.
Please continue.
With that, thank you. But that does leave us some very important items that we do need to discuss today. And that is, of course, the expanded level sheet. So for the public, when we present a budget, it is a flat service budget, meaning there are no expansions of service included in it unless they are written up, first approved by me and then approved today through specific discussion with the board. So we will be doing that after the general budget presentation by the Finance Department. And then we're going to talk about a couple of new things, which is the American Rescue Plan, as well as some late-breaking news, which is the video gaming push tax. So those conversations will happen after Michael's presentation. And again, I thank all of you for not only being here, but supporting us collectively over the last 18 months and allowing us the success that we're presenting today. So with that, Director Kaplan.
All right, well, good morning, everyone. I'd like to just echo the comments of the village manager and thank you for being here and for all the work that you did reviewing the budget and asking questions about it and participating in the process, and also the work that our staff has done. All of the departments are part of this process, and it's a lengthy process. There's a lot of time and effort that goes into it, and I think they do a great job every year. And as the manager indicated, the news this year is mostly very good. And that's saying something coming out of, we're still coming out of a pandemic and still dealing with the effects of COVID-19. Last year, when we were talking about the budget, the situation looked much more dire, and our proposed deficit for last year reflected our concerns about what was going to happen to the village's major sources of revenue. But the situation has turned out to be much better than anybody expected, and that's a great thing. Before I get started, I just wanted to note for the public that we have the proposed budget available on the village's website. On the first slide, you can see where it's located at wheelingil.gov. If you click on transparency and then budget information and then the 2022 proposed budget, you can find a copy of the document. And the document focuses on the issue on being transparent. It has all of the line item detail for every department's budget, so you can see exactly what is in the budget and where the village's revenue comes from. And for anybody in the audience here today, we have a few extra copies of the budget at the end of the table here. Feel free to grab one if you'd like. So I'm going to go through a few of the slides as I do every year. Brian is going to help me out, and John is going to take a section at the end on the American Rescue Plan. We're going to try to go through this quickly, keep it moving. I'm going to just go from slide to slide, and Brian is as well. If you have questions, please feel free to interrupt us. Otherwise, we're just going to keep moving through it. So with that, let's go ahead and get started. And these are the topics for today. We're going to talk briefly about the economy, explain what the budget is for people at home that may not know how governmental budgeting works or the Village of Wheeling's budget works. We're going to talk about projected results for 2021, revenue and expenditure trends, some brief information on the property tax levy. We'll take a break if everyone would like to. Then we'll talk about the 2022 proposed budget. We will celebrate our financial success by giving you an overview of where we stand currently, talk about pension funding and benchmarking as we do each year to update that situation. We'll also do some revenue and expenditure benchmarking. This year, as Village Manager Spondilis indicated, the Level the Playing Field Act went into effect on January 1. We'll talk briefly about that, and then we'll end with some discussion of the American Rescue Plan Act. So, as I noted, we are still recovering from the COVID-19 recession, but in general, things look pretty good. And because the economy was shut down in 2020, gross domestic product was down that year, GDP, significantly, but the rebound is substantial. It's up, as of the second quarter of 2021, 12.18%. And for those not familiar with it, the GDP is the market value of all goods and services that are produced in the United States. So things are looking up in terms of GDP. The same is true, I guess, in terms of the consumer price index. It had been fairly steady for a number of years. This year, though, prices are going up significantly. There's a lot of built-up demand for goods and services as we emerge from the pandemic, and so prices are going up substantially. As of September of 21, they were the CPI was up 5.39%. The talk is always about transitory inflation when you turn on the television. Is this going to continue at that rate, or is it transitory and going to return to normal? I guess we'll have to wait and see. And rates have also interest rates have gone up slightly as well in the last year. They've been low for a very long time, really going back to the early 2000s. 2021, the 10-year Treasury rate was at 1.08 as of January 1st. As of Friday, that had risen to 1.56%. So we are seeing a little bit of inflation. However, if you look historically, the last 10 years, we're still below where we have been. Anyone who has money in a 401k or a 457 plan probably feels pretty good about where you stand at this point, and that's because the stock market has been up substantially, really in the last 10 years, but certainly in the last 3. If you go back to 2019, the returns have been significant, and as of Friday, the S&P 500 stock index was up 22.61% for the year. Now, I put a note down here that those returns greatly exceed the Village's investment return assumptions for their police, fire, and IMRF pension funds, which are all at 7.25%. And one thing that you'll notice in this year's budget, or I should say the budget for 22, is that our pension costs are going down. And this is a big reason for that, is because investment returns have exceeded the investment return assumption. Put a note here that since 2012, the S&P 500 is up 13.9% on a compounded annual basis. And if you had invested $100,000 in 2012 in the index, it would now be worth $323,000. So that is substantial growth, and that's a good thing for our pension funds. This slide shows home prices in the Chicago area, which, again, keeping with the theme, are up substantially this year. There's a lack of housing because the economy was shut down last year, and so as a result, prices for homes in this area are going up significantly. This is the University of Michigan's Consumer Price Index, or I'm sorry, Consumer Sentiment Index. It's a measure of how people feel about the economy, and even though other indicators show that the economy is doing well, as of the third quarter of 2021, the index indicates that people are still a little bit anxious about the economy. Just a note here that consumer spending accounts for 67% of gross domestic product in the U.S., so it's a major part of our economy. And this is a slide that shows total vehicle sales. If anybody's driven past a car dealership recently, you'll see that there's a lack of cars on the lot. People are paying over sticker price in order to buy new cars. Used cars are also very expensive. and that's just because there are supply chain issues, and therefore sales are down significantly this year compared to prior years. And this is a slide that shows consumer spending. Spending is up substantially this year. Again, there's pent-up demand from last year's shutdown of the economy, and so people have more money to spend. They've received some stimulus payments, and as a result, they're spending more. And then these are the unemployment numbers, which are also good compared to a year ago. You'll see that last year there was 8.2% unemployment in Wheeling. As of August, that had dropped to 5.2%. And those numbers are generally better than the state of Illinois as a whole and as in the United States. So back for 2020, unemployment was such that there were 1,781 unemployed people in Wheeling. That has dropped this year to 1,147, which is a good thing. So now I'm going to talk briefly about the budget. I know you all have seen this before and you're familiar with how our budget works, but there are no doubt people at home that may not be familiar, so I just wanted to briefly talk about it. And the budget can be thought about in terms of really being like separate bank accounts that have separate purposes. And we talk the most about the general fund, and for 2022 we have budgeted expenditures in the general fund of almost $43 million. Most of the revenue from the general fund comes from property sales and income tax. Those three sources of revenue make up almost 2/3 of general fund revenue, and the general fund pays for all of the operating costs of the village. So that would be all of your police officer salaries and benefits, firefighters, public works employees, most of your public works employees. There's a portion in the water and sewer fund too. And then the administrative staff, CD, human services, finance, et cetera. The water and sewer fund is a separate fund that exists solely for the purpose of operating the water and sewer system and paying for the costs of doing so. It's managed like a business. It's an enterprise fund, but it's a business that does not intend to make a profit. The purpose of the water and sewer fund is to pay for all of the operating and capital costs of running the system, but to break even in the long run. And then we have TIF capital projects funds. The largest source of revenue to the TIF capital projects funds is property tax increment, which is used to pay for economic development projects and infrastructure projects for the most part. We then have the police and fire pension funds, which are trust funds. Major sources of revenue to that are investment returns and employer and employee contributions, and we'll get into that a little more later. But that is money that is solely for the purpose of paying pension benefits and is not money that the village can access for any other use. Then we have the Capital Projects Fund. That's funded by gas and electric use tax and pays for infrastructure projects, mostly streets and bridges and that type of thing. The bond funds are funded by property tax revenue and transfers from the Capital Project Fund, and they exist to pay the principal and interest on the village's debt. We then have the Liability Insurance Fund, which it was set up to pay for insurance premiums and claims related to general liability and workers' comp claims. And so the major revenue sources are transfers from the general fund and the water and sewer fund. The motor fuel tax fund is another fund that pays for capital projects and operating costs related to the village's roads. And it's funded by the motor fuel tax, which you pay whenever you fill up your tank. The village gets a per capita share of that from the state of Illinois. The 911 fund pays for the village's dispatching center and a portion of the Red Center costs for fire. It's funded through a fee that you pay on your cell phone bills and on your landline bills for those who still have landlines. Then there's the Foreign Fire Insurance Fund. This is a tax on out-of-state insurers that provide fire insurance. It's managed by the Foreign Fire Board, and those are funds that can only be used to pay for equipment and services that benefit the fire department. Then we have a grant fund, which accounts for any state and federal grant money we receive. We typically receive a number of grants for police and human services programs and other projects on an annual basis. Then we have the Stormwater Fund, which was set up back in 2016. Its major funding source is a fee which is based on the impervious area of single-family homes and businesses, and it pays for operating and capital costs related to the Stormwater Fund. And then finally, we have a Capital Equipment Replacement Fund, which is funded through transfers from the General Fund and Water and Sewer Fund and pays for equipment replacement so that the village does not have to borrow for those costs when vehicles and other equipment have to be replaced. And a question that often comes up is, well, how much money does the village have? And this slide tries to demonstrate that. As you'll see, the general fund at the end of this year, we expect, or I'm sorry, at the end of 2021, we expect to have $16.5 million in reserves. That represents about 38% of annual operating expenditures. And it exceeds the village's policy requirement of 25%. The Water and Sewer Fund has $6 million in reserves. That represents 57% of expenditures. And it's well above the 25% policy, but that's because capital projects in the Water and Sewer Fund fluctuate from year to year, so the fund balance fluctuates as well. Now, I won't go through the rest of these, but I just wanted to give everyone a feel for how much money is in each of the funds. I guess the only one I would mention is the police and fire pension funds. They have $118 million in them combined as of 2021. That's what we expect at year end. And that's money, as I said, that's intended to pay for future pension benefits.
Michael, how much of that $118,000 by statute can be invested in the stock market? Isn't it a percent? And has that changed, or have they talked about changing it?
Well, it's a good question. State law limits it to about 60%. So 60% can be invested in stock, and 40% can be invested in fixed assets like bonds and cash.
They don't. There had been talk about changing that. Is that a dead issue?
Well, as the village manager indicated, we're now going through the consolidation process where all of the 650 separate police and fire pension funds are going to be consolidated into one police pension fund and one fire pension fund. They will be allowed to invest more than 60% in stock. But the individual funds as they exist now have that limit on them.
Okay, thank you.
Mm-hmm. So as I indicated, the 2021 projected results are much better than expected. We had budgeted a deficit of $1.6 million, and that was because when we were having this meeting last year, we were in the midst of the pandemic. We really didn't know what was going to happen to our sales tax and income tax revenue, and we were, as always, conservative about our projections. But sales and income tax have been much stronger than we expected and much stronger than the Illinois Municipal League expected. So as of now, we're expecting a surplus of $726,000. That might actually end up being higher than that by the end of the year. And as I noted before, our fund balance is healthy at $16.5 million. And
Director Kaplan, on a surplus, isn't our policy that once a surplus, what do we do with the surplus?
yeah, so the village board passed a policy a few years ago that requires the board to consider contributing surplus to either the pension funds or I believe the Capital Equipment Replacement Fund. And so it's not a requirement that you actually do that, but you have to at least think about it every year. And the board has been consistent in contributing that money to the pension funds. And that's why our funded percentage has improved in recent years.
I just want to point out that we don't just put it in the general fund and say we're doing better and.
Right, right. It's a great policy, and a little later there's a slide that shows exactly the contributions that you've made over and above what the actuary requires over the years, and it's substantial.
Thank you.
So again, this shows why we are having a much better year than we've expected. Sales tax is up over $1 million, or 12.5%, more than what we budgeted. That's because coming out of COVID-19, there's been, as I said before, pent-up demand. People are buying goods more than we expected. Also, the federal stimulus payments helped in that regard. And it appears that the job losses resulting from the pandemic were concentrated in lower paying positions. So people making a little bit more money are still buying things. And yes.
Can I interject here? I just want to make a point that Director Kaplan said it, but I want to make sure that it registers. It's above what we expected. What we expected, though, was very low. So can you talk, and I know you get there a little bit later, but I want to make sure that this resonates. Can you talk a little bit about how this compares to a quote-unquote normal year? Because what we don't want is people to walk away thinking everything is great and all of a sudden we have all this extra money. Some of the reason that it looks, and we are having such a great year, is because our expectations were lowered. So when we talk about above, we're not talking about new money from, say, 2019, because that's not, you've heard us use the term structural before. Structural means either on the revenue side or on the expenses side that you've added or removed something that is permanent, so that you can expect that benefit year after year after year. So again, I want to make sure that it lands that these are not new monies that we expect to see year after year. And of course, that's going to come up when we talk about the levy. So can you just...
Yeah, sure. No, it's a great point, and I'm glad you brought it up. And we'll see that in a couple slides. Our sales tax revenue is still below where it was for 2019. This $1 million increase is relative to what we budgeted, which was less than what we normally receive. So it's not as if we received this windfall. We're really kind of flat in terms of prior years. But on a budgetary basis, we brought in more than we expected. The same is true of income tax. Income tax has been up substantially this year. And that has shown some growth, as you'll see in a few minutes. Food and beverage tax is up $17,000, again, over what we budgeted, but down compared to prior years. And hotel motel tax is still down compared to the budget and prior years as well. Other miscellaneous sources in general are up $195,000 for various reasons that are not as significant. But to summarize, our revenue we expect to be $2.2 million over what we budgeted, and our expenditures are in line with what we budgeted. The variance on revenues is about 5.5%. We typically try to finish within 2% of the budget, and we've been able to do that for many, many years. When we prepare the budget, we expect to be anywhere from 98% to 102% of our projections. So this year being an unusual year, we expect revenue to be 5.5% more than what we budgeted. And so therefore, again, the budget showed a $1.6 million deficit, but we anticipate a $726,000 surplus. And this just simply shows the general fund results by year for the last 10 years, surpluses versus deficits. And as the village manager indicated before, we've had a run of several years of surpluses. which has allowed us to contribute more money to our pension funds. In fact, 8 of the last 10 years have been surpluses, so we have been doing very well in general. And then this slide shows our fund balance by year. And you can see back in 2012, going back 10 years, we were at about a little less than 14 million. This year we expect to be at about 16.5 million. Our fund balance back then was 41% of annual operating expenditures. It's dropped to 38%, which may sound strange. Even though the dollars are going up, the percentage, as a percentage of next year's expenditures, has gone down slightly because expenditures go up every year. So it's just a function of the math. But 38% is a very healthy fund balance. And with that, I'm going to turn it over to Brian. And
Good morning. Morning. I'm going to keep moving as quickly as I can, so just jump in with questions if you have them. This first slide we have up here for 2 reasons. One is to reiterate how these taxes are distributed, and we're also looking to show that these 3 main sources of revenue are unequal both in the amount that we budget for annually, but also in the amount of control that we have over them. So looking at sales tax, the village receives 2% of the Cook County sales tax percentage, and that's on items like when you go to restaurants, hotels, liquor stores, and then when you shop at Walgreens, the grocery stores, drug stores, you're going to pay 2.25% in sales tax, and the village gets just 1% at that point. We don't have a lot of control over sales tax other than to bring in new businesses or to help stimulate the current businesses we have in town. We budget about $9.7 million for next year. The state imposes income tax on all individuals and corporations in Illinois, and then it distributes it per capita to all the local governments. So this tax really has nothing to do with how much income tax our Wheeling residents and businesses pay. It's merely our portion of the state's larger pie. We can't raise, our only form of control lies in increasing the total population in Wheeling. So we have a slide coming up about the 2020 census results, and I'll go over that in more detail. But again, very little control over how much money comes in other than population increases. That revenue source is about $5 million, so almost half of what sales tax is. And then the revenue source we have the largest control over, which is property tax. You can see the burden that gets placed on that when you think about how much control we have on it. We can levy every year. As a home rule community, we can levy over 5% if we have a significant deficit that we need to cover. And it goes into effect right away, whereas with income tax, a change there only occurs every 10 years with the census, and sales tax, you have to wait for developments to occur. So as a result, you see that our property tax levy has increased to almost $17 million over the years, and it's our largest source of revenue. Combine the 3 sources, total about $30 million, compared to almost $44 million in the general fund, which is about 67% of revenues. This is the 2020 population or census results. As you can see, our population went up about 1,500 people. At the same time, the state's total population decreased, which is great news for us because it means going forward, any per capita revenue source that we have, we'll get a larger share of. So Michael and I did some projections for next year based on this result, and it looks about an additional $300,000 will come in next year based on the census results. And that'll be true generally going forward for the next 10 years. This is sales tax over the last 10 years. As Manager Spondilis mentioned earlier, it's been a flat revenue source for quite some time. In 2020, when the stay-at-home order was put into place, you saw a major shift occur in sales tax and use tax based on people's ability to spend their money online rather than going to the store. You saw that significant drop, almost $900,000, almost $1 million. And then when the Level of the Playing Field Act kicked in on January 1st, you saw some of those use tax dollars move up into the sales tax line. So a majority of that 2020 recovery, 2021 recovery you see there is a direct result of the Level of the Playing Field Act. And that's good news for us because you can see we're right in line with where we've been in that flat sales tax over the years. And when you look at other more local taxes that we have, like hotel, motel, and food and beverage, we know that we're not fully recovered yet. So that means we potentially have a higher ceiling going forward in sales tax. We might actually see that number climb above the 5.75 million number going forward when we recover fully. Here's the opposite effect on the use tax. You see in that 2020 number those internet sales that occurred. And then as the Level of the Playing Field Act comes into play, you see it drop right back down more in line with where we've been. It's still up a little bit there, but we're expecting it to stay flat and more in line with that line you see going across. It should also continue to go down based on some of the businesses are still figuring out how to correctly apply the new Level of the Playing Field Act. So we've seen it kind of trickle in, and it'll continue to trickle in over the next 12 months as more of the smaller businesses figure that out. And then here's income tax over the last 10 years. This is kind of the big shocker we have for this year. You can see the huge jump in 2021, which we weren't expecting. If you look at the bottom there, you'll see that the Illinois Municipal League, which serves as kind of a compass for us when we start doing the budget, they had projected 3.7 million for 2021, and we're now projecting 4.7 or 4.8 million for the year. And that's because the stimulus packages that went into that the federal government did, and also corporate economic returns have been higher than were expected due to the pent-up demand that the public had. And you can see, you would have expected 2020 to drop based on the unemployment rate, which in April of 2020 for the state of Illinois was at 16.5%. But the recovery started to happen. In June of 2021, we were down to 7%, 7.2% in Illinois. And so the 2 years got boosted. So we were real low in income tax at the beginning of 2020, but then it started to recover in the third, fourth quarter due to the corporate returns that were coming in. And then this is a 5-year comparison, fiscal year 17 to fiscal year 21. You can see the flat sales tax. You can see the big increase in income tax. You can see telecom still going down. We've discussed that over the years. You can see hotel and motel still recovering. Food and beverage is doing a little better because of the work that the Community Development Department has done with businesses to allow them to do online orders and pick up. But going down to the bottom, you'll see that our revenues have increased 8.68% over the 5 years. Compounded annually, that's 2.1%. And when you flip over to expenditures, you'll see the compounded annually number here is 2.64%. So higher than the rate at which our revenues are going up. And just to quickly explain, this is kind of our general salary and benefit costs that would go into the general fund, which make up 60 to 70% of those costs annually. So we have a firefighter, a police officer, a maintenance operator from Public Works, their insurance costs, and then their pension costs. And when you compare the two over the 5 years, again, you see the 2.64% increase. And I think that's all I have for now.
All right, thank you. And so now we're just going to talk briefly about the property tax levy. And the village's share of the property tax bill is down this year. It was 13.89%. It's dropped to 13.6%, which, as you can imagine and figure out, means that 84% of the tax bill goes to other taxing districts. And you can see that the schools are the largest share of the property tax bill. This year, the Property Tax Limitation Act limits the amount that the other taxing districts can increase their levy to 1.4%, which is based on the Consumer Price Index for the preceding year. So unless they had gone to referendum to sell bonds and gotten permission from the voters to increase their levy more than that, those taxing districts will generally be capped at 1.4%. As we noted before, the CPI is going up 5.39%, and the village's costs for goods and services are going up as well. We've been notified in recent months by a number of different vendors that because of supply chain issues and inflation and so forth, that they plan to increase their prices, and they're passing that on to us just like everybody else. This shows a history of the property tax levy for the
Excuse me,
last...
Director Kaplan, can you go
Yes.
back to that slide, please?
Sure.
Okay. That one. Sorry.
It's okay.
So would the other taxing bodies then, more than likely, next year, will their tax levies be, we're all going to say, oh my God, what happened?
Yeah, I think you've nailed it. Next year, I expect the Consumer Price Index, and therefore the PTEL, will be much higher. It might be in the 4 or 5% range. And so those other taxing districts, and this is not a criticism of them, but it's just reality, have a history of increasing their levies by the total
Maximum,
amount.
right.
The total amount, because they know that if they don't, they'll never get that opportunity again. And so I would expect that I can't speak for them, but I would expect that most of them would increase their levy by whatever the PTEL amount is next year.
Thank you.
Again, this is a 15-year comparison of the Village of Wheeling's property tax levy. And the purpose of this slide really is to show that, for better or worse, an increasing portion of our levy is going to fund the village's 3 pension funds. That's police, fire, IMRF, and you can throw Social Security into the mix as well. But you'll see back in 2006, we levied $8.8 million in total levy dollars. 58% of that went to the general fund at that time, and 11% went to debt, and 31% went to the pension funds. Fast forward to 2020, and our levy has grown to $16.8 million, and now, however, only 42% of the levy goes to fund the general fund. Debt has remained basically the same on a percentage basis, but the share that goes to the pension funds has gone up from 31% to 45%. Again, this is not a criticism of pension funds, it's just the reality that as we get closer to 2040, we have to be 90% funded in our pension funds, and so the amount that the village as the employer has to contribute to those funds keeps going up as a result.
And Director Kaplan, right here.
Senator.
Sorry.
So,
It's hard to know where the
Yeah, I
is
know.
coming from.
so when you mentioned, it was mentioned a couple of times earlier that when we declare a surplus, it goes towards, the pension funds, and there might actually be people awake at home who find nothing better to do than watch this. God bless them. And so if you hear that enough times, you're like, well, wouldn't it be better to use that money towards the sewers? Wouldn't it be better to use that money towards some other service? But we are still working under this mandate of 100% funding of the pension funds, which has been mathematically proven to be unnecessary.
Yes.
But this is law, this is not math. And so there's a necessity to keep squeezing money out of the public to fund these funds, these pensions. They deserve their pensions, but a balance needs to be struck. So I just wanted to make sure people understood that constantly pulling money from the fund where we might be able to use it somewhere else and depositing it in the pension fund because we are basically required to. It's certainly not my choice, but it's a requirement. Everybody deserves their pension, but the town deserves one too. So anyway.
Yeah, it's a very difficult balancing act, but we are required by state law to make those contributions every year. If we don't make, I'm not suggesting this at all, but if we thought about not making the contribution to the police and fire pension fund, the state of Illinois would withhold income tax and other revenue in order to make the contribution for us. So there's really no way to avoid it.
I can say that while there isn't anything specific yet, there has been some indication for willingness at the state level to at least have the conversation about adjusting the law that says 90% funded by 2040. The discussion at this point is, would it simply be kicking the deadline to 2050? Or would it be changing the requirement to a rolling deadline that would simply extend by, say, at this point, 19, 18 years on a rolling average? So you always are 18 years out from having to be, and I'm saying that because it's 2022 to 2040, from being 90% funded. That makes the most sense. And if there is a bill, we hope that that's the process that they follow. Should the state just decide to kick the deadline to 2050, that actually makes it worse for us. Michael has run some numbers for me, and it indicates it's several, do you happen to recall? It's millions and millions of extra dollars.
Tens of millions of dollars by extending the deadline to when you have to be 90% funded.
So as President Horker said, the policy is broken. It is not an issue of pensions and people's right to a pension. It is the process that has been created and the restrictions that we are being held to by the state.
Pat?
Trustee Lang, go ahead.
A few years ago, we talked about having pensions built up to what you actually need.
Yes.
So these 90% numbers, by 2040, that's great if everyone left, if the villages shut down and all the employees left and they were all paid out and so on.
Right.
So you don't really need 90%.
That's right.
Okay, so that concept was touched on a few years ago. It's nothing new. But has that gotten any tracks at all within the state?
The IML has sponsored a bill that would lower that to 80%. And I'm actually on their Pensions and Personnel Committee, and it's something that I bring up every time we have a phone call, and it doesn't seem to go anywhere. Pensions are a hot topic in Illinois and throughout the country, and I don't think that there are a lot of state legislators that want to touch that, even though I think it would be the right thing to do.
And I sit on the legislative committee, and I can tell you there's no desire to fight that fight.
It's a hot topic because there was still push for everyone to understand that these funds were promised to people, and therefore they need to be paid out. And I
Right.
think we're past that now. We all feel that way. At least I'm 100% sure on that. But it's actually
it's the drama versus the reality. If
Yeah.
you say they should be 100% funded, it sounds wonderful.
right. It sounds like you're
Well,
okay.
of
Now
course they
you
should
have
be
a commitment to
100%
your
funded.
people.
But then you have this reality that, well, everybody can still be paid at this other percentage.
Right.
Well, I'll repeat what got me misquoted several years ago and say that it's simply irresponsible. It's irresponsible. It is
Well,
not prudent.
To that point, and when we make contribution to the fund, it's a trade-off between, as you pointed out, President Horker, a trade-off between spending money on roads and bridges and other things that we need now, police and fire and so forth, versus funding pensions that won't be paid out for decades. And so
It won't be necessary for decades.
right, and so it's a balancing act. And if we were a private company, I think we would all agree that we should be 100% funded because the threat of going out of business is always there.
It's real.
But as a unit of government, I fully expect that Wheeling will always be here long before all of us in this room are no longer here, so long after, I should say. So that's why it's not necessary to be 100% funded.
That wasn't part of the agenda, but it just needed to be said.
Yeah.
Thank you.
Excuse me, one other question.
Sure.
On the 90%, and you mentioned 80%, has anybody determined what the average payout per year of a pension fund is? I mean, is it 80%, is it 70%, is it, what number do we really need to be?
Yeah,
Responsible.
Our pension payment, if we didn't pre-fund our pension funds, we could pay them out on a pay-as-you-go basis. It doesn't make sense.
I'm not suggesting that,
Yeah, it's
but,
not financially smart to do that. But, our pension payments would be, off the top of my head, maybe $3 million a year or something like that.
so even at our current level, which I believe is close to 70%,
Yeah, we'll get to that in a minute. But yeah.
we're more than sufficient to make payments.
Right, and we'll be able to make those pension payments for decades at 70%.
Not that we're not following the law, I just want to point
Right.
out that we're okay.
Right, because you have to remember, every year, the village is making large contributions to the fund, and so are the employees, and then you have investment returns. So there's a lot of money coming into the fund each year to make those pension payments. So there's no danger that we're going to miss a pension payment, at any time in the future.
Thank you.
Did I get it right?
Yeah, you were pretty close. For police, it's close to $4 million in 2021. And for fire, it's a little bit less, like 3.5.
Okay, and so we do financial forecasting on a 5-year basis to try to determine whether or not we're going to have surpluses or deficits in the future and to plan accordingly. I go through this process every year, and this year Brian did this independently of me to check my numbers, and we came up with very similar numbers. This is sort of a worst-case scenario. It's not intended to suggest that we go 5 years without a property tax increase. The purpose of this slide is just to show how important property tax is as a source of revenue to the general fund, so that if we did not increase the levy for 5 years, we would be okay for, really the next couple of years, but then we start to run rather substantial deficits in years 3 through 5. And this is the same forecast, but it assumes property tax increases of 3.5% annually, just for the sake of argument. And if we were to approve that for next year, it would bump our surplus up to about 1.5 million, and in 2023, we would still have a large surplus, and we'd be pretty close to balanced in 24. But 25 and 26 start to show deficits, and the reason for that is because of the fact that our expenditures typically grow at a faster pace than our revenues do. That was something that Brian talked about earlier. If you remember, for the last 5 years, our revenue has been growing at a 2.1% compounded annual rate, but our expenditures, I think, were going up at 2.62 or something like that. So that's what that gap is, what leads to these deficits in future years.
And it's important to point out that nearly all of those increases are uncontrollable on our part. This is not additional spending. It's increases in expenses related to the 77% of the budget that is personnel.
And this just shows you the history of our property tax increases going back to 2011, so for the last 10 years. And what this shows is that the trend is right here in the 4 to 6% range. Our average has been about 4.5%. There have been years when we haven't increased the levy. Last year was one of them, but 2011 as well. And what the village manager and I have always tried to avoid are these peaks and valleys. We get no joy out of coming to you and saying we need to increase the levy by 10 or 12%. And so that's why you have consistently heard us, say that we think there should be an incremental increase every year that's manageable and predictable. Just to put this in perspective, a 1% increase in the levy for 2022 would equal $168,000 of new revenue. Do we want to take a break, or do we want to power through?
Yes, take a break.
Break.
Need a motion to take a break.
Just a recess.
Take a recess, I'm sorry.
So
Was it-
moved.
Second.
Motion Vito, second Papantos. Can I do an all in favor? We're all here?
Yes.
All in favor?
Aye.
Recess, 5 minutes. All right, there's a procedure here. Where's it go? There it is. I need a motion to reconvene into regular session for the budget hearing.
So moved.
Trustee Panto, second trustee Rufato. All in favor? Aye. And we're off, but just a little.
Going to cover a little bit of the 22 proposed budget. Every year we have this meeting around Halloween, and every year the IML comes out with a new projection around this same time. Once again, that happened this year. Michael and I looked at those projections and compared them to what we were looking at, and we both agreed, and we talked to John, that maybe we should increase some of those projections. So starting with our proposed budget with a surplus at 650,000, we're going to increase that to almost 950,000 for next year, and that's based on the items below. So the IML looked at the income tax numbers that have been coming in. Again, corporate profits are still strong. You're still going to have a little bit of inflation next year, even though we do think that a lot of the inflation is transitory. It will take a while to taper off. So they've increased their projection about $250,000. At the same time, they've reduced their use tax projection, and that's again based on the slow trickle of the level of the Playing Act relatable items moving up into sales tax. So they've lowered that about 70,000. And then at the same time, we've been looking at the cannabis excise tax, which is the tax that comes directly from Hatch, our dispensary over on Lake Cook. And those numbers continue to climb as we start to get them. So we've increased our projection for that by 120,000. So as I mentioned before, we've added about 300,000 to the surplus for 22. Just briefly, we wanted to mention the CIP program. 9.6 million budgeted for next year, and we have not bonded for any of that. That's all money that we've saved and that we're now putting back into the roads and the infrastructure of the village. Here's the rest of those projects. Some street work being done next year. We'll talk a little bit more about Wheeling Road later. These are the expanded level requests that were previously approved by the village manager and are in the surplus numbers I've been telling you. We will vote on those individually later. The air compressor here will go into the SURF fund for future. We're going to talk about 6 firefighters. Chief McGreal has some slides. And the asset management software in here is coming mostly out of the water sewer fund. We added just about 100,000 of expenses to the general fund. General liability insurance fund. Last year I got to give you about the one good news piece we had. This year I'm going to give you the bad news piece. Village has been self-insured since 2000 in general liability insurance. And we did that because we had previously been involved in a pool with other communities. We found that we had less control over our own claims in that group. We found that we could get reduced rates operating on our own. And so we did that, and it's been a very successful program. However, last year, Michael stood up here and he warned you that rates would climb by about 50% in 2021. They ended up climbing about 40%, but we're going to see it occur again in 2022. We're expecting another 36% increase this year, based on the same reasons we gave you last year. The weather-related events out in California, down in Louisiana, out in Florida, that increased law enforcement, perceived risk across the country, and the one item that's more local, the bad of being in Cook County is that we have the claims from the city affecting our current rate. But again, none of these increases are related directly to Wheeling at all. Further, we're going to see an increase in our SIRs, or I'll just kind of call them our deductibles. So we're self-insured up to $650,000 on a workers' compensation claim for a policeman or a firefighter. That's going to go up $100,000 next year. So we'll be on the hook up to $750,000 for them on a workers' compensation claim before a catastrophic kicks in, and up to $650,000 on a more administrative employee, public works. So our net cost increase is about $240,000 next year. Claim experience has still been stable. And again, this is the reason we're self-insured right here. Our ability to manage this over time. You see that we've been pretty steady the last 3 years. We'd like to see a little better than that. There were some claims in there. There were some workers' comp claims that were a little larger than normal. But again, you could see without them, we'd be down in this area. We'd like to see some more of that going forward. But again, a steady line across, average losses of about $575,000 a year. There's a couple funds that we typically go over, so I'll try to cover them quickly. The Water Sewer Fund. We incrementally raise the taxes here every year based on, if you can remember the beginning of the presentation today when Michael covered that the Water Sewer Fund covers its own capital. So you have the increased salary and benefits in this fund, but you also have the increased costs of construction that come into play over time. So we incrementally raise that rate. We're looking to raise it 3.5% next year, which is about 29 cents per 1,000 gallons. And it would cost the average resident about $17 a year, $17.50 a year. This is our water usage over time. You can see that due to increased efficiency in appliances and the ability to conserve water by the residents and businesses improving. In addition to that, you can kind of see that the last few years we bottomed out a little bit due to the pandemic. That was mostly industrial buildings that had their usage tapered. We're hoping to see a small bump next year. But again, I kind of feel like this is the area that we're always going to operate in unless things get extremely more efficient. Because we don't bond for projects in water sewer, because we're pay as we go, thanks to the incremental increases, you can see that our rates remain lower than most of our surrounding communities. Moving on to the Stormwater Fund, very similarly operated as the Water Sewer Fund. We created the fund in 2016 with a fee that started at $2 per ERU. That is a calculation that is based on the amount of impervious area on each property. However, when it comes to single family, we're charging everybody the same rate, just that one ERU, which is currently at $3.25. We've chosen the same path and incrementally increased those taxes by 25 cents every year since 2016. And
Brian, I'm sorry, can you go back to that last slide? I want to brag for a second.
Yeah.
I'd just like to point out that these 10 communities, not including Wheeling, were not randomly selected in order for Wheeling to end up being number 2. The rest of our neighbors go up from number 11. So I think it is a huge deal that our water rate is as low as it is. And I think we should be very proud of that. And as Brian said, this comes on top of the fact that we're not bonding for projects. So I know Brian said it, I just wanted to reiterate it and point out that this This wasn't a slide that was created in order to make it look more rosy than it really is. It goes up from there. I could tell you my rate is significantly higher than Mount Prospect's.
And
Beyond that, on Buffalo Grove, Wheeling, Arlington Heights, and Palatine make up the Northwest Water Commission.
That's
If I'm
correct.
correct, and
That's
that was formed back in
1985.
85, which has held our rates overall to a point where it's remarkable.
Yes, and we're looking to extend that for the next 50 years.
thank you. I meant to mention that. Some people might be thinking, boy, I wish we were number one. Well, I think we talked about it last year that Buffalo Grove bonded like 70 million or something like that last year. And so it's just better to be pay-as-you-go as we are. So our water system is in impeccable shape, and we're thankful that we have very limited water loss as a result of our continued projects in that area. So that's why we created the Stormwater Fund, because we had a stormwater management plan created that included $48 million worth of projects. And so we used those fees to do those projects. I think the most recent one that we did was over on Industrial Lane. We're asking for another 25-cent increase this year, that same incremental increase. It would generate another $79,000 annually. Currently, we're bringing in about $1.1 million annually. So enough to do a project. We could do maybe a project every year, but we could do a couple large ones over 4 or 5 years.
Have we ever looked at a point of 10 years out or whenever this fee can remain steady, that doesn't have to continue to go up, that we've done all the projects that we no longer need?
Well, we have the $48 million plan that we're working on, so that's going to take a while to get through all of that. But yeah, sure, at some point that could happen, where we don't have as many projects and we can kind of maintain over a longer period of time.
Thank you.
And here's our ability to brag again. So we started that fee really low, and we remain near the top or the lowest rate in the surrounding communities.
And without jinxing anything, I would like to point out, as I'm sure you've all experienced, it has been quite a while since Wheeling has had a significantly negative impact from flooding. And I don't think, while luck plays a part in that, I do think that it is on the shoulders of our millions upon millions spent in the last 5 years, 10 years really, of stormwater projects. So that is through great effort of working around Mother Nature. And that is still with us being at number 3 on this list.
Yeah, well, they've been choosing the projects wisely, certainly. Moving on, we just wanted to cover some of our financial successes. The village maintains 2 of the highest ratings you can get from Fitch and S&P, AA+ for Fitch and AA for S&P. That has allowed us over time, over the last 5 years, to do a number of refundings of our property tax related debt. Last year, I'll start in 2016, we refunded the Weston bonds. That gave us net present value savings of over $3 million. Last year, we refunded the 2011, 2012A, and 2012B bonds. We received net present value savings of over $450,000 on those bonds. And currently, we're looking at a potential opportunity to refund the 2008 and 2009 GO bonds. Those would not necessarily have significant savings, but it would get us out of the swaps that we went into with the Park District in those years, and would just make the investments a little bit more enticing to investors and also a little safer on our end. we've covered throughout the presentation that we're pay-as-you-go for our capital improvement projects. We also do that for our equipment. So anytime we need a ladder truck or those big fire apparatus, that is money that we have been saving since the beginning, so we don't bond for anything like that. And I think it's really significant the way that Manager Spondilis, the board, and Michael have handled TIF development incentives over the years. I think it's the main reason that our TIFs are relatively successful. We do not, when we get into an agreement with a developer, we do not agree to give them money until the project is complete, and we do not pay down those bonds until the increment comes in from that development. So it's a way of guarding ourselves to get what we were looking for with the development and make sure it's successful before we start to get ourselves into trouble. We wanted to bring up the strategic plan since the board voted on changing it earlier this year. This section is just on the financial strengths, and you can kind of see how we fall in line with them. For one, we're always looking for opportunities to make the delivery of core services more efficient or cheaper. We've done that in a number of ways over the recent years. I know that most recently, I guess from my point of view, we're currently working on new software to streamline payroll. The police department recently streamlined their ticketing process to where they enter the tickets in the vehicles rather than writing them down and giving them to staff to enter. Lots of little things like that have happened over the last few years. In addition, the financial strength plan asks us to look for opportunities for new sources of revenue. We have the new cannabis excise tax that came in with Hatch. We have recently signed up for the ambulance GEMT revenue that the fire department brought us last year. So we're always looking to cover those gaps, or that fourth leg, as Trustee Lang mentioned last year. In addition, we're always looking to avoid issuing property tax levy supported debt. Now, we have a slide in a minute about that. Speaking of looking for new revenue sources, these are all of the COVID-19 related funds that we have received or will be receiving in the next year. We received about $200,000 from FEMA in reimbursement of the fogging that's done at our public buildings to keep the environment safe for the public to come in, as well as our employees. The PPE, or the masks that fire and police departments are wearing when they go out and visit the public. In addition, the CARES Act also had a sub-fund, the Provider Relief Fund, that was able to reimburse us for ambulance service costs. We actually applied it to the billing for our third-party biller for ambulance services, so those costs were kind of free for us last year as a result. And wrapping up the CARES Act, we received $630,000 last year that we directly applied to firefighter and paramedic salaries. So again, that went directly to our bottom line because we are already having those costs, but this was a reimbursement of them. And the big ticket item is the recent American Rescue Plan Act. We will be receiving, as the board knows, about $5.2 million, and we will vote later on what those projects will be. So all in total, about $6 million in the last 18 months or so. So a huge windfall. In addition to that, we also have some construction grants that came in. There's the Rebuild Illinois money, about $2.5 million. And I believe it was Public Works Director Kopp that came up with the idea of submitting for this Surface Transportation Program grant, which is another $6 million, and we've been really clever with this. we spoke about Wheeling Road earlier. We'll be using some of the Rebuild Illinois money to pay for Wheeling Road, but we're submitting that along with our grant application to cover our end of the bargain when we potentially receive the $6 million grant for the project. So another $8.5 million there, directly into our CIP program.
For budgeting, it's important to note that we don't know when these grant opportunities are going to come. So to the staff's credit, they have to monitor this stuff is coming along, get the paperwork right, because it is a bureaucracy. And then when we get money like this, it's a bonus. It's a Christmas bonus. It's money that we couldn't ordinarily plan on. So we really can't budget on it to begin with, because nobody knows what Springfield or the feds are going to do. But this is really just money that we got that is Easter egg. I don't know.
Yeah, go ahead.
Well, and money that's being redirected specifically into the community.
Oh, yeah.
You know, this is not money that is sitting in our coffers, you know, for a rainy day fund. This is money that's going directly into
Scrooge McDuck
infrastructure.
sitting there going.
That affects every resident, business, and traveler through our community.
Being prepared is all part of it. So you have your master CIP plan, you have all those upcoming projects, and when a grant comes out and we get notified or we find it, we're then able to think smartly and apply that to these projects that we have coming up. So being ready for those grant opportunities is a big part of this. And this is our outstanding tax levy related debt. Right now we have almost $31 million, and over the next 8-9 years we will pay that all the way down to $1 million. This slide is a huge success for us. Not having property tax related debt allows us to use all of the property tax levy on core services. So using this slide doesn't happen overnight. This is something that happens over a long period of time with smart action by the board and wise advice from the finance and village manager. I kind of call this Michael's application to the godfathers of municipal finance. I think if we just submitted this, he'd be in when he retires. It's something for all of you to be very proud of, and I'm proud to be up here talking about it. And I will hand it back over to Michael. Godfather Cap.
Oh, that's a lot to live up to.
Do you have a big ring or something?
Yeah, I'm going to get one now.
Yeah.
You now need to speak like this.
Yeah.
All right, so we're wrapping up, and I know everybody's excited about that concept. And we just want to talk about pension funding and give you an update of where we stand. And this chart was, or table rather, was in your budget letter. And what it does is it shows what our contributions are to each of the pension funds for 2022 and what the funded percentages are for each fund. So as you can see, the contribution next year for police is about 2.7 million, for fire 2.8, and so on. Police is funded at almost 73%. This is per our actuarial reports. Fire is a little less funded at 69, but still high. And for the first time in a very long time, IMRF is actually overfunded at 100.88%. And so what you'll see is, in the case of police, that means that there is an unfunded liability of about 29.4 million. Fire is 27.8, and this negative number for IMRF is actually a very positive thing, meaning that that's an asset. We're overfunded by 613,000. There was a mistake in the budget letter that showed this as still being underfunded, but in reality, it's overfunded. So just on an average basis, we're at about 81% funded. That's not weighted. That's just taking a very simple average calculation. And the total unfunded liability is $56.6 million. That's what we would owe to the funds in order to be fully funded. And we'll see in a minute that's certainly a lot of money, but it's not out of the ordinary as we compare ourselves to other communities. Good news is that our costs are going down next year, which is, I think, the first time in at least forever that's happened. $207,000 due to strong investment returns. As we talked about before, we have to be 90% funded by 2040 per state law. The other thing I wanted to mention is that we now have 69 Tier 2 employees, which are 31% of our total. In 2011, the Illinois State Legislature passed a law that created Tier 2 pensions. Those pension benefits are less costly to the municipalities than Tier 1 benefits. And so over time, pensions will become less expensive from a municipal standpoint. So we're at 31% of our employees receiving Tier 2 benefits. And it's always important, I think, to keep in mind when we think about police officer and firefighter pensions, that the village does not contribute 6.2% to Social Security for those employees like it does for everyone else. So while the contributions are significant, we have to remember that we're saving, in essence, the 6.2% that we would otherwise be contributing to Social Security.
Director Kaplan, go back, sorry.
No, that's okay.
On the IMRF fund, so we're technically fully funded,
Yes.
but we're still going to contribute.
We still have to make our annual contribution.
So will we continue to be overfunded? Will that increase continue? I don't know if I'm saying it right.
It really all depends on investment returns. We could, if investment returns are not equal to the 7.25% assumption that IMRF uses, we could find ourselves, unfunded next year. I mean, not unfunded, underfunded.
But we could also find ourselves
More
significantly overfunded.
Yes. So it just, whoever has the crystal ball and can tell me what the stock market's going to do.
When you find out, can you let me know too?
Right. But that is a significant accomplishment to be overfunded. And part of that is because IMRF has, as we'll see in a minute, achieved very high returns over the last 10 or 20 years. So, as we noted before, the pension funds are going to be consolidated. Police and fire, IMRF is already consolidated, but police and fire will be consolidated in the next year. In fact, the fire pension fund has learned that they have to transfer all of their assets to the state, the newly created state fire pension fund, by January 4th. And the police pension fund will have to do the same shortly thereafter. It has to be completed by June 30th of next year. And so these two new consolidated funds will operate much like IMRF has operated for years. And the theory is that they should produce higher investment returns than individual pension funds have been able to achieve, because there's economies of scale. They can invest in things that the local pension funds can't invest in. And to that point, between 2012 and 2020, IMRF averaged 10.34% annually as an investment return. Wheeling's fire pension fund produced 8.76%, and police produced 8.36%. Now, all of those are good, but the point here is that, in theory, a consolidated fund should do better.
Would the administrative expenses also be lower in consolidation?
Yes. We may not need to hire an actuary every year, although the village may choose to do that anyway. But we will not need investment managers, that's for sure, and that's a big part of our costs every year, is we have to hire professionals to invest the assets, but that will be done for us.
How does that equal out with communities that have saved a lot for their pension fund, as opposed to those who haven't and,
Right.
and are deficient in their funds, how does that equal out?
It's a great question. Each fund will have a separate account, and so there will not be a situation where Wheeling is subsidizing Buffalo Grove's pensions. And that's how IMRF works too. We still have our own costs. They're just simply investing the assets for us.
Makes sense.
Okay. So as noted, Wheeling pension boards will no longer have investment authority because that will be turned over to the state funds. We won't need investment managers, and we may or may not have an actuarial report at that point. The state pension fund should hire their own actuary or rely on the state's actuary, but the village may choose to hire its own actuary because we may want to contribute more to the funds than the state requires us to. And just so everyone is aware, if you haven't heard, there are several pension boards and retirees that have filed suit alleging that the consolidation law is unconstitutional. That is making its way through the court system. I believe it's at the appellate court now, and at some point may work its way up to the Illinois Supreme Court. That if that goes against municipalities, that we could find ourselves managing individual pension funds again. I'm not sure which way it's going to go. One of our pension board attorneys said he thinks it's a 50-50 proposition at this point. So again, we need that crystal ball. But the plan right now is for consolidation. And then I just wanted to put this up here to show you, this is a pension dollar that IMRF uses this graphic every year to show how pensions are paid for. And although this is based on IMRF, it would probably be largely true for police and fire pensions as well. And the point here is that every dollar of pension benefits is split among three ways. So most of the pension benefits that are paid come from investment earnings. That's about 64 cents of the dollar comes from investment earnings. 24 cents comes from employer contributions, and the other 12 cents comes from employee contributions. So pensions are always a hot topic, nationally and locally, but it's important to note that 76% of pension benefits come from either investment earnings or employee contributions. And as we've done in the past, wanted to show you a little bit of benchmarking our pension funds to our neighbors' pension funds. And as you'll see, this is based on percentages that are a little lower than what I mentioned before because it's based on the state of Illinois' actuarial reports as opposed to our own actuarial reports, which are more, and the state of Illinois is more conservative in that regard. But this is apples to apples. And what you'll see is that the village's police and fire pension funds are about 61%, 62% funded. That's right in line with the average for all of these communities. And there are some that are better funded on a percentage basis and others that are less well funded. Funding percentage, however, can be misleading because it's a reflection of what your assets are to your liabilities. But that doesn't really give you an indication of what these communities owe to their pension funds. So the next slide shows that in real dollars, this is what each of these communities would have to pay into their pension funds to be fully funded. And so while we saw on the previous slide that, for instance, Buffalo Grove is 72% funded, compared to Wheeling's 61%, what you'll see on this slide is that in terms of real dollars, the amount owed to the funds are very similar. And so you can be Glenview, which has, again, if I turn the right way, you have a Glenview that is relatively well-funded at 68.5%, but owes a lot more to their pension funds than Wheeling does. And so that's, I think, important to point out. Now, again, this is based on the state's actuarial reports, which assume a 90% funded target and use a 6.75% investment assumption as opposed to our 7.25%. And that's why the numbers don't look quite as good as what we talked about before. The average without Wheeling is $106 million per pension fund that's owed to police, fire, and IMRF. And then this is the unfunded liabilities on a per capita basis, looking at the population of each community. This is what each resident of these communities would have to pay into the funds in order for them to be 90% funded. So you can see again, you know, we're sort of at the low end of the scale here.
But in a good way. I mean, we're on the low
That's a
end of the
good thing.
scale, but we owe less, that means.
We owe less.
Yeah.
Right. Yep.
Sorry.
No. So the question is, what can we do to improve our pension funding? And one of the things is simply just to contribute more. And the village has contributed nearly $4.5 million more than has been required by the actuaries over the last 10 years. And that's because of, as Trustee Papanta has indicated, our surplus policy, which allows us, I should say, to contribute to our pension funds each year. Police and fire pension fund consolidation should increase our investment returns and improve our funded percentage. And as we talked about previously, the IML has proposed legislation that would push the 90% funding requirement from 2040 to 2050. Here's a chart that shows the additional pension contributions that we've made to police, fire, and IMRF going back to 2011. And the yellow indicates and the dollar amounts here indicate how much more we contributed than the actuaries require. So as you'll see, the total required contributions over that period of time were $47.6 million, and we contributed an additional almost $4.5 million. Those additional contributions, again, come from the general fund surplus policy, and every time that the village declares a surplus in a TIF district, the police and fire pension funds receive a share of that too, which helps put them in a better position. And just to put in perspective what Manager Sfondilis was talking about earlier, right now we have this 2040 date that's looming out there that we have to be 90% funded by, and that is the most aggressive amortization date of all of the state's pension funds, as you'll see by this chart that IML put together. All of these other pension funds have later dates that they have to achieve 90% funding by, and that's why the IML has proposed changing that law for downstate police and fire pension funds. Okay, wanted to do some quick revenue and expenditure benchmarking to make the point that we are operating efficiently for Wheeling's taxpayers. And one thing we've talked about in the past, but it's worth looking at, I think, every year is sales tax by community. And what you'll see is that Wheeling, no surprise here, does not receive most of its revenue from sales tax. And it's actually our share of sales tax revenue, or the amount of sales tax revenue that we receive is actually very low compared to our neighbors. In fact, Buffalo Grove and Northbrook are good comparables based on population, and you can see by this chart that they receive about $4.5 million more annually in sales tax revenue. And just to put that in perspective, as we talk about a surplus next year of just over $900,000, imagine where we would be with $4.5 million of additional sales tax revenue.
Well, and that 1% increase on our levy is $168,000.
yes.
So we would be doing okay with $4.5 million extra
Right.
dollars annually.
But this slide, I think, is very important because it demonstrates why the Village of Wheeling has become dependent on property tax increases to pay for core services. Some of these communities, Niles being a good example of that, are less dependent on property taxes because they receive so much sales tax revenue. Another example of that would be Vernon Hills, which doesn't even have a property tax levy because they receive so much sales tax revenue. And this is a similar slide, but I've thrown income tax into the mix to show that when you combine that, again, we are significantly less than Northbrook and Buffalo Grove at now nearly $5 million, as opposed to just 4.5. So they're, in other words, receiving $5 million more in these two sources of revenue than we are.
Michael, does the income tax go per capita, or does it go?
Income tax is per capita.
So how are they getting so much more?
Just because their population is higher. They're not getting any more than we are on a per capita basis, but because these communities, with the exception, well, Buffalo Grove has a little bit more population than we do.
So, right, so how does Northbrook get more money with less population?
They're not getting more. This combines sales.
Oh, I see.
So this slide is just to illustrate when we talk about the legs of the stool.
Yeah, no,
This
I get
is
it.
just more of a
I was
complete
misunderstanding. I thought it was only income.
Yeah,
Okay.
It's just the two combined.
Right, right.
And then this is the three combined, which is sales, income, and property tax. And Wheeling is providing core services with less revenue than any of these other communities.
And better services.
And better. We don't say so ourselves.
I mean, somebody had to say it.
And then these are the property tax levies by community. This is how much they collect in total property taxes. Again, Buffalo Grove and Northbrook are right around, they average 19.5 million between the two of them. Wheeling's at 17.4. And to the point that I made before, Niles is the lowest on this list because they receive so much sales tax. I mean, the two are completely related. The more sales tax you receive, the less property tax you need. But we're still low, with only Glenview and Buffalo Grove being higher. Being lower. We're still on the low end of property tax collections. I guess Niles is lower too.
But that also doesn't take into account that we don't issue debt for things like water main replacement or anything else. So
Right.
we are living on what we have, and we're not borrowing to do any of our projects.
Right. Financially, I think we're doing all the right things in terms of pay-as-you-go for all of these different projects and setting aside money for capital equipment replacement, paying down our debt. Our pension funds are getting better. It's all good news. And this is total general fund revenue by community. So this throws everything into the mix. And as you can see, once again, the story is the same. We are providing these much better services at a lower price than, or a lower amount of revenue, I should say, than these other communities. And then this looks at the other side of the equation, which is expenditures. And again, providing the same services at less cost. And I always try to look at how many employees we have compared to other communities as a measure of efficiency. And the easiest way to do that is to focus on police, fire, and public works, because all of these communities have those three departments, and it's apples to apples. So, and as you'll see, we are providing those services with fewer employees than these other communities are. Buffalo and Grove and Northbrook are averaging 183 we're at 154. And this is on a per capita basis, which I think is really kind of misleading. I put it up there just so you can see it, but it's misleading because, you know, each of these communities only has one village manager and one finance director and one community development director and so forth. So the more population you have, that makes you look better, but we're still looking pretty good, I think, from this perspective. And then this is fund balance as a percentage of annual operating costs. And I threw this in there just to give you some perspective on where we stand compared to our neighbors. This is fund balance as a percentage of current year expenditures, not next year's expenditures, which is how we typically cite fund balance. So earlier I said we were at 38%. But as a percentage of current year expenditures, we're at 42. And I had to show it this way so that I could get the apples to apples comparison to every other community. But you'll see that that's pretty normal compared to our neighbors. There are a few that are much higher, Des Plaines and Niles being the two highest. And I can't really speak for why their fund balance is that high. Sometimes communities accumulate fund balance because they are planning to fund some project in the future, like a fire station or a police station or something like that. I don't know what the explanation is here, but I would say that absent some kind of major project like that, to me, that's excessive. But don't tell the finance director in Des Plaines that I said that. Because she's a friend of mine, so I don't want her to be mad at me. So, but you know, you can have, the point here is you can't have too much fund balance, and at that point, you're doing a disservice to your taxpayers. And that's all I had. So now we are going to turn it over to, oh no, I'm sorry, I'm doing level the playing field, right? And then you're going to do the American, okay, sorry. So this was a question that came up from one of our trustees about the Level the Playing Field Act and how that's impacted the village. It went into effect on January 1st, 2021. And prior to Level the Playing Field, when you would go online and purchase something from Amazon or eBay or something like that, the state of, well, let's focus on Amazon, but the state of Illinois would collect 6.25% in state use tax. Amazon would collect it and turn it over to the state of Illinois. And the village, they would distribute that on a per capita basis to all of the, so it didn't matter that you were a Wheeling resident buying that item on Amazon. That would go into a pool that the state would then distribute on a per capita basis to all municipalities throughout the state. So if you bought something on Amazon for $100, you'd pay 6.25% state use tax, and the village of Wheeling would get a few pennies of that money, nothing significant. So the reason that level the playing field is so important is because now when you go online, for the most part, and you make that same purchase, Wheeling is going to collect its 2% share of the 10% sales tax rate. So the way this works is, if you buy something from a brick and mortar store in Wheeling, so say Walmart, and this is no change from how it's always been, you pay 10% sales tax, which means that on a $100 purchase, Wheeling receives $2. Now, if you were to buy that same item online after the implementation of Level the Playing Field from Amazon or Wayfair or something similar, and it was shipped out of state to a Wheeling address, Wheeling will once again get that $2 in sales tax. That was not the case prior to January 1st. And that's also true if you make an online purchase on a marketplace, which would be a company that sells on Amazon or something from eBay or Etsy or something like that. The retailer is located, whether they're located in Illinois or outside of Illinois, the Village of Wheeling is still going to receive its sales tax rate. Now, I should say this only applies, there's a note down here which is cut off on the screen, but it applies to retailers with 200 annual transactions or 100,000 in annual gross receipts. So if you're the small, mom and pop business that doesn't, is selling on eBay and doesn't bring in that much money, they're not required to collect the sales tax rate. But any of these major companies would have to. And then if you buy something online from an Illinois retailer and it's shipped from an Illinois warehouse, so you buy something from Amazon, but Amazon ships it from inside Illinois, we do then, in that case, from a distribution center in Illinois, in that case, the sales tax would go to the city or village where the warehouse is located, meaning that we would not get anything on those purchases. But for the vast majority of purchases that are now made online, we will start collecting and have been collecting our sales tax rate. We looked at this week, and it appears that as a result of this new law, we're going to collect about $800,000 a year in revenue that we did not collect previously.
So I keep reading about Amazon opening new warehouses. I know there's one in Palatine, and I think a new one's going to open in Arlington Heights. Do we need an Amazon warehouse in Wheeling?
We do. And I'm counting on Pat to bring us one.
Really?
That one, not me.
There's no pressure.
Just to be clear.
So for
not that Pat, the other Pat.
for clarification, Sherwin-Williams manufactures paint here and sells it in various stores throughout the state and country.
Yes.
Because they manufacture here, we don't get anything but property tax. And they're shipping it out, but they're not shipping it direct to a consumer. That's the difference.
That's the difference. Yeah, they're selling it wholesale to companies that will, or to stores or whatever that will sell it retail. It's not a point of sale transaction.
So the retail stores or the end store is the one collecting the sales tax.
Right.
The brick and mortar end user purchase is where we get it, yeah. And except for pot.
And that's why we want to, as we have been, trying to expand warehouse and outlet sales in our industrial areas to gain property tax, or gain sales tax.
Right.
Some of those sales, small as they are, there's still some sales tax that is available for that.
Yep, exactly.
To that point, Trustee Lang, and you don't have to go backwards, but one of the slides that Michael showed was sales tax, Wheeling and Buffalo Grove, and Buffalo Grove was substantially higher than Wheeling, and one may logically think, well, wait a minute, they don't have a mall or anything else. The point you just made is exactly it. They have several businesses in their industrial parks that sell directly to customers, and that's where they're getting that sales tax number from. That is key for us. We're never going to become a retail mecca. I mean, no one's building malls. So from that perspective, our focus, as you said, is and needs to remain on the industrial parks and trying to bring in businesses that are selling directly to consumers in order to capture some of that sales tax.
And John, if I could just add real quickly, Glenview's sales tax numbers is almost 80% apt.
Oh, sure.
So, they're.
So that's it. Now I'm going to turn it over to the village manager to talk about the American Rescue Plan.
Thank you. You're still going to be my slide guy, though, right? All right, thanks. Okay, so I get to present some of the exciting news. As Michael said, the topic is the American Recovery Plan Act. And I say exciting, understanding that this money is emergency funding that comes at the cost of the negative effect of COVID-19. But the point of the ARP, the American Rescue Plan, was to try and make municipalities whole, yes, but to take that money then and reinvest it back into the community. So what you're going to hear is what Wheeling is going to do with that money as we walk through the next couple of slides. So as you see here, there was $65 billion of the $1.9 trillion economic stimulus that was passed on March 11th through HR 1319. Wheeling's share of that is $5.2 million, of which we've already received half, so we are sitting on that money. The other half should come in the next 12 months. We have until 2024 to spend that money, and of course there are a number of restrictions which we'll walk through in a second, and as it says, can only be spent on eligible uses. The important key to ARP money is what those monies cannot be spent on. Monies cannot, and I think this is important maybe more for the public who are perhaps expecting a check to come from the municipality. Specifically, the ARP, which again, this is a federal program, obviously, and therefore they are federal requirements, cannot go to replace revenues due to a local tax cut or a local tax refund. They cannot go to making pension payments. They cannot go to funding debt service. They cannot pay for legal settlements or judgments, and they cannot be deposited into a rainy day fund or through creating special financial reserves. The point is that you reinvest in your community, and that's exactly what the Village of Wheeling is going to be doing.
So is that basically use it or lose it?
Yes.
Yeah, we have until the end of 2024 to spend the money.
Right. Right. This is just a little more detail on kind of what I already walked through, premium pay for essential workers, because you have to qualify the money that the federal government is doling out, and there is a reporting structure that we have to abide by as we look at what programs we use to spend down on that money. I think you could go to the next slide.
Okay.
So this slide is an opportunity for the board to present to the public what we're doing with that money. And this slide, I know it's a little hard to read, but we can post it, and you'll see it's in a different format, and that format is based on the strategic plan. It looks like it belongs in the strategic plan because that's exactly how staff approached making recommendations for what to do with this money, based, of course, on the requirements of the federal government. Included in this slide, then, are the Rebuild Illinois monies. So maybe a month or so ago, we brought you a resolution authorizing our use of the Rebuild Illinois money, so that decision has already been made, and that's where you saw on a previous slide that we would be using $725,000 for the Wheeling Road storm sewer culverts reconstruction and repair, which also then allows us to apply for and hopefully receive the $6.1 million through the surface transportation program. In addition, we will be spending let's call it $7 million on a mill and overlay of Northgate Parkway. That's the state money. The federal money for ARP is going towards building Fire Station 42, relocating Fire Station 42, with the remaining amount going towards a to-be-determined water infrastructure project. I thought this slide was important because, yes, it supports some of the initiatives from the strategic plan, but it also very clearly illustrates how the Village of Wheeling is reinvesting back into the community. Regarding Fire Station 42, this is not a new program. This is something that the village identified and approved 4 years ago or so when we first looked at tearing down and rebuilding the now reopened Station 23. At that time, we talked about designing a building that can be duplicated, recognizing the need in the northwest quadrant of our town to relocate Station 42, which is currently a part of the police department located right here on the municipal campus, needing to improve our service level on the west side of the tracks. So we own land at the water tower just behind the bank on McHenry Road, and the decision at that time was made, design a building that can be duplicated, or replicated, and start putting money away. So we have done that for the last 4 years. We have approximately $2 million already set aside. I think that's important because this is not just an idea that we came up with because we now have ARP money. This is finishing an initiative that the board approved several years ago, which then has a cumulative effect because as this money goes to begin and complete the construction of Fire Station 42, it frees up about $500,000 annually back into our CIP for other capital projects. And this is a little fluid because of course we haven't bid out the fire station. We know what the building will cost with at least a good guess because we just built Fire Station 23. It is on a different piece of property. So there's a longer drive aisle, there's going to be engineering issues, but we think we have a good handle on what the cost is going to be. But I do say that this is a little fluid as far as the mix between Fire Station 42 and future water infrastructure projects. If the board agrees, we will notify the necessary parties next week and start the process of getting Station 42 underway for construction as soon as possible.
Do we expect a significant increase in the cost of materials? We've heard so much over the past year of lumber and
Sure, I've had that conversation with our biller, W.B. Olson. There will be an increase. It is not something that we expect to take our breath away, but we will competitively bid all the trades just like we did last time. And things are a little better than they were if we were having this conversation 3 or 4 months ago as far as materials go. And by the time we begin construction, hopefully the supply chain issues, which are one of the largest contributors to why the costs are so high, hopefully that will be a little bit back to normal. And we'll be able to capture some of that, I guess you'd call it savings, but reduction in increases.
Thank you.
Again, I guess we could talk about any of that if anyone has any specific questions for the public's benefit. We did have meetings individually with the elected officials, which allowed me then to present this as kind of a bragging rights for how we're reinvesting in the community. But if anybody has any specific questions.
Trustee Papantos had
Sure.
Thank you.
I think she wants to know when it's gonna open and.
No.
Sorry.
That was too easy.
Yeah. A quick question about TIF and expirations for some of our TIF districts that are coming up. And I mean, to my knowledge, in very basic terms, the purpose of a TIF is to take a blighted area that's producing very little revenue as far as property tax goes and develop it so that that revenue has now increased. Right. And I mean, if you don't do that, then the TIF is a failure, right?
Yes.
Okay, so TIFs are going to expire, I'm guessing, I mean, depending on the TIF,
Well, South Milwaukee expires in '23.
Okay, what does that do for our total income coming in from property tax then? Because the taxes then are no longer going back to the TIF, but...
Right. So we're going to have to, at that point, go through the same exercise that we went through a couple of years ago with the expiration of the Crossroads TIF, where, you know, that EAV from that TIF district will be added to the village's total EAV.
Please
right?
define EAV.
Equalized assessed valuation, which is the value of all the property within the TIF district. Right now, that the property taxes from those properties goes into the TIF fund. That EAV will now get added to the village's overall EAV. And unless the village increases its levy to capture that quote-unquote new growth from the TIF district, that money would be lost to the general fund and so forth. So, it would be our recommendation at that point that we increase our levy to capture the new growth, which would have no impact at all on the village's taxpayers.
Great. Thank you. And then the Milwaukee Avenue, Lake Cook TIF?
Lake Cook is 2026 or 2027, I believe.
27, I believe.
Okay, and Town Center and Southeast are way out there because they were just created in 2014.
Right. And there are murmurs of revamping TIF as far as legislation goes, correct? Do we know where that stands?
Yeah, there's one particular bill, but there is a fairly substantial effort at the state level to either reduce the number of years, which is 23 currently, and or change the definitions and thereby the opportunity for municipalities to create TIFs. But there are a number of bills in various forms. So the general answer is yes, there's a lot of push by school districts in particular to limit the use of TIF districts, which would be unfortunate in communities like Wheeling was 25 years ago. Without the TIF districts, you would not see most of the growth that we are experiencing right now. I think it's also important to point out that we do declare surplus every year, which means that all of those taxing bodies receive monies above their tax cap. And in my opinion, then negates the idea of a negative impact caused by a TIF, because ultimately they're still getting that money, and it's free money. It's now above their tax cap.
Thank you. Thanks.
Okay, well, sorry. Before getting off of the American Rescue Plan topic, there was a request by the Park District as to whether or not there was interest on the village's part in sharing some of that revenue with them. The request is certainly not out of line, as it's important to note that at the federal level, there is some understanding that it is normal for a park district to be part of municipal government. So in Illinois, there are a number of communities like Wheeling where the park district is a separate taxing body. That is not always the case. The park district is simply another department of the municipality, no different than engineering, police, fire, public works, et cetera. So certainly that request is not out of line. Staff's suggestion, should the board be willing to consider that request, would be $100,000, and that is simply based on understanding the needs that we have to finish some of the initiatives that I mentioned. We feel that that's an appropriate number should the board be willing to consider that request. So I can answer questions. And I am looking for direction.
I did have this discussion with John, and I thought maybe they could use, I don't know, half of it or so towards their webpage. It was just a thought. I think it would be fair to share it, and I know typically I don't go first. Typically I ask for opinions from the trustees, and so now I will go there. Trustee Lang, you had something to say?
Yeah, do they have a set project? I know we had asked for one, and I wouldn't be opposed to sharing if there was a project that perhaps benefited both, maybe on this campus, that benefited both the Park District and the village.
I do not have a specific answer for that, so they have not identified a specific project, but there are also limitations as to what they can do with the money based on the federal regulations. But should the board decide to provide this assistance, I think we can make that very clear, that within the parameters that they have to work by using this money, that we would like to see something that's very visible for the whole community, as opposed to, say, tucked away at a park that's in one particular neighborhood.
You work here, you know this campus quite well. Is there anything that you can see that's deficient that might help? Has staff identified anything that might be able to help both of us? Parking, something to that effect that may
No
this
is the
campus.
answer. We have not had that discussion, but we certainly can.
No. Okay, so back to a poll. Share with so I think that's actually a good condition, share with a specific project. Trustee Lang?
Yeah, I think a specific project that would help both
The community,
of us. That's where I'm at.
Excellent. Trustee Rufato?
Yes, agreeing with what Trustee Lang just said. Very
Okay.
specific.
Okay. Trustee Vito?
Yeah, I'm for it. I think they're integral, as Ray was kind of alluding to, in the development of this campus to bring people to town center. They're a big part of what's driving the sales tax of the town center, I think. Every time you go into City Works, it's people in baseball jerseys. So, and they don't get to, receive any of these dollars. I think they can use it. So, yes.
Thank you, Trustee Vito. Trustee Papantos?
With a cap and only with a specific project.
Trustee Vogel?
Specific project, yes.
Thank you.
Okay, thank you very much. Moving on then to discussing the expanded level sheets. As we do every year, and as I explained at the beginning, we present a budget that does not include any expansion of services without the specific approval from the board. To be clear, the way the process works is staff from any department makes a recommendation. We call them pink sheets, and you will have seen those in your draft budget. If I sign them, they become white sheets, and once I sign them, they are included in the budget that is presented to you. So this year, I signed all of the pink sheets, so everything we are about to discuss is already included in the budget that's been presented. So as we go through these, I will ask for direction on each one, but please know that you're not adding to the budget. These monies are already in the budget. And since they were presented to me and then I put my name on them, I typically present these to you one at a time, and then if there are questions, obviously the department heads are here and can provide far more detail than I can. So hopefully I'm going to go in order and don't confuse anyone. Michael, do we have? Okay, we do. I don't have a page number.
216?
216, thank you. I thought I was being slick by printing them out
separate.
216, which is a request from the Community Development Department for a digital plan review table. Before talking about what this is specifically, this is the first of several items that you will see in these quote-unquote pink sheets that is using technology to advance the ability and efficiency of staff to do their job. We actually heard it a little bit earlier about how important some of the projects that we have completed recently that are based on technology have helped us, and of course that lowers our cost, but in order to do that there has to be an investment in technology. This is the first of those types of requests, and this is specifically for a touchscreen plan review monitor. It is literally, it's essentially a whiteboard on a cart that can be shared. It's a giant screen. You could write on it. It is a fully digitized piece of equipment that allows for plan review where you are not sitting down at a table unrolling a large plan set and making handwritten remarks. This is beneficial particularly to the way we are set up, where fire prevention and CD share the same office space. So this would be used by both departments. And again, this is simply an efficiency, and quite frankly, it's something that has been on the market and utilized pretty much everywhere for quite some time. So this is a little bit of playing catch up for us. It is expensive. It's $10,000. In my opinion, certainly worth the money. Director Clicker, anything to add?
Just that this would also help with efficiencies with, as every contractor, every developer out there now produces their plans digitally, it will actually cut down our environmental impact of processing permits because we can accept plans digitally. Our third-party plan reviewer can also accept these plans digitally, and we can share comments back and forth easier. So it should just provide an overall efficiency for our department function.
You currently are receiving plans, hard copies.
Yep. So like, for example, some of the projects we've recently brought in have been over 500 pages. So 500 plan sheet pages copied
it's not
5
this
times.
page.
No, it's
No.
24 by 36 inch pieces of paper or
Posters.
larger.
Yes.
So that's, 5 copies of that. That's significant cost to the developer and to the end user of that project. So again, being allowed to accept these digitally should actually not only help environmentally, but also help their costs.
Not to mention the tonnage of product you're moving.
Yes.
Okay.
Well, and we do receive some plans digitally. Do we print them then?
If needed, yes. Signs, we've taken sign reviews to a completely digital format, but yes, if we get other things in digitally now, we print them out and send them to the other departments, yes.
Any questions on this?
Yeah, I have one.
Vito?
Where you've seen these used in other localities, do they actually ever bring it into a village board meeting, or is this all back of the house stuff?
It's back of the house stuff,
Okay.
but the beauty of it is because of the size of the screen, you can literally have the plan open at scale and be able to see comments and everything very clearly and easily, and it's a tremendous tool to use.
Can you bring it to a meeting?
Sure, they're mobile.
It's on a cart.
I mean, because to Trustee Vito's comment, I mean, sometimes you look at these things, even on an iPad, you
Yeah.
can't see them. So, thank you.
Yeah, if necessary, we could roll it off to the side so that anyone can look at something at scale. Sure.
No objections? Left, right, next?
Page 217. I figured it went in order. This is a request from the police department. The description is a WatchGuard 4RE battery backup. This is exactly as the description says. This is a battery backup for the cameras, the storage of the information from the cameras in squad cars. We had a situation this year where the squad was involved in an accident and it cut off power supply to the CPU, and we lost all that data. This is a battery backup for our squads to avoid a situation like that in the future.
Anybody not want to back up
Deputy Chief Conway
body
can-
cameras?
If there's anything.
I'm sorry, Deputy?
As managers from Dealer said, it's pretty self-explanatory. It'll keep the DVR running in case we lose battery power in the car.
Any objections or problems? Left, right? Looks good.
Thank you. Page 218, another request from the police department. This is performance management tracking. Effectively, this is a utility that allows for, it's performance tracking, but it's also annual review planning. It allows the opportunity to consolidate everything that happens with an employee in a single year into a single resource that is available both to the supervisor and to the employee. This is specific to the police department. So there are many nuances to the way in which an officer is reviewed versus, say, anyone else in the village. So this is very proprietary. The department feels that this will absolutely help them and their employees with efficiency through the process of evaluation, but also because of that allow real-time changes should there be a situation that need to be impacted by conversations with the supervisor. Fairly inexpensive, just below $5,000. And again, Deputy Chief Conway can answer any specific questions.
We have Trustee Lang, then Trustee Rufato, and then Trustee Papantos. Trustee Lang?
I just wanted to ask about any kind of morale type issues with this. This would probably eliminate some of any kind of morale issues if someone thought they were being reviewed in a negative way. Am I reading that wrong, or is that?
Well, Trustee Lang, no, the officers are encouraged to speak with their supervisor if there's an issue. And this will correct an issue, then let it linger throughout the year immediately. So it'll improve.
Great. Thank you.
Trustee Rufato?
This is just a general question. I'm okay with this. This is great to have something like this. But these first three pink sheets, now white sheets, totaled $21,000. Do we have a threshold as to what is submitted for a pink sheet?
No.
So if something is like $600, it would come on here in pink sheet? I'm just wondering.
A floor?
Yeah, a floor, because, I think these things like this just are normal day-to-day that we need.
There is no specific number, but case in point, Director Huizar asked for a couple of radios.
Yeah.
We're going to get the radios.
Now, see, that should have been, no, I'm just kidding, but I'm just wondering why.
Well, part of this is also showing you some of the back of the house stuff that I think is important for you to know how we're doing business.
Yeah.
The answer to your question is no, it's my discretion. If it's really low, we just do it.
Yeah.
And then if it's something, $5,000 typically would probably be the lowest. But I thought this was also a good one because I think particularly when we talk about law enforcement and the national conversation, I think any improvement in the way officers are evaluated is a good thing to talk about.
All right, well, thank you for that explanation. I appreciate it.
Thank you, Trustee Rufato. Trustee Papantos?
Thank you. So each employee or each officer can read their own file. What's the security on it so that somebody's not sharing somebody else's file? Or
Trustee Panos, I'm not sure, but I will assume that they will have a password to go in and check their file.
okay, so that we don't have files floating around and people misinterpreting or people reading each other saying, no, that's not true.
Yeah, yes, but I will find out and let you know.
Thank you.
Thank you, Trustee Papantos. Mr. Spondolis?
All right, page 219. This is a request from the fire department for an addition of one self-contained breathing air. I'm still going to call it scuba, even though it's not underwater. Compressor fill station for Station 23. This is exactly that. Is a fill station for the tanks of compressed air that the firefighters use. What is not written here, but I think is very important, is that, well, first of all, this is for Station 23. The use of this equipment was built into the physical design of the station. So there is a room at Station 23 that is built for this. This particular piece of equipment was not included in the budget for the building because we wanted to make sure that we did not go over the budget for the building. But we have $40,000 in contingency that will go to pay down this $65,000 expense. So that's not written here, but I thought that was important. Again, this is part of the design of the building, but not included in the budget. And for Station, for Station 42, to get ahead of that question, we will not need to repeat this expense when we build Station 42.
That was my question.
Okay, so you just eliminated two questions. Questions or objections to my left? Nothing. Questions to object to the right? Looks like you're good on that one too. Go ahead.
Excellent. Thank you very much. Page 220. This is a request from the fire department, and it is for the addition of 6 firefighter paramedic positions. This has been 15 years in the making. This is a topic that we have talked about at the board level during budget meetings for, specifically during budget meetings for probably at least the last 10. We have gone through the analysis. You have heard all of the background information regarding response times, regarding the amount of money that is currently being spent on overtime because bottom line is we recognize that we are understaffed. And it was, and should be to the credit of the fire department and the finance department and human resources, as we continually repeated this conversation, I said to them that I'm not coming to the board asking for more bodies if we can't find a way to pay for it. It's just not going to happen. We come to you and we look for levy increases every year in order to maintain all of the great things that you heard over the last couple of hours. I cannot come to this board and ask for 6 employees, $800,000 to add bodies. So with their great work, we are presenting this today for the addition of 6 bodies at a cost of a savings. Can you have a cost of a savings? I don't think you can have a cost of a savings. But we're going to save approximately $10,000. That happens through the cooperation of all of the departments and all the people sitting over there. In short, we are eliminating 3.5 positions, 3 full-time positions, 1 part-time position. It's 1 position in CD, 1 in police, and 1.5 in public works. All of those positions have remained open for the last year because this has been an ongoing discussion for so long. I ask that those positions stay open and we give it a trial year to make sure that none of the departments would make the argument that, look, we need to fill that job. So we're trying to be responsible in making sure that we're not, 1, eliminating a position that we need, and 2, creating a situation where we come back to you in 2 years and say, we undershot, we need those bodies back. So those positions have been open for at least a year. So I am confident in telling you that we can eliminate those 3.5 positions. The remaining amount of monies that are being reduced in order to create the savings is from the overtime budget. We are anticipating being well over $1 million in overtime in the fire department for this year alone. We've already exceeded this year's budget amount. Typically, you would hear me and the finance department make an argument that it makes more sense for the village to spend money on overtime than on hiring more bodies, because with the bodies comes pension obligation and everything else. And I stand by that, but there is also a point where you're leaning on overtime and therefore the employees too much, and it's becoming unsafe, and it's just, when you know that that situation is going to repeat year after year after year, you need more bodies, and that's where we are. So effectively, the way that we are paying for this is a reduction, significant reduction in overtime, and the elimination of 3.5 positions, which all in then gets us 6 firefighter paramedics at a savings of $10,702 annually.
So breaking in format, I'm going to go first again here too, just to point out, 1% increase in our property tax equals how much? About $170,000. So we're spending $1 million a year on overtime in the fire department. Just wanted to throw that out there. And so we're eliminating positions in community development, and you're good with that, Mr. Clicker? That was a yes? Yes. Awesome. Love to hear it.
Yes.
Mr. Kaup, I know you've been here a long time.
Yes.
Have you been here a year now?
I've been here for 10 months.
Awesome.
Yeah, it'll be a year on December 2/2.
You're good with this?
Yes, yeah, the 2 positions are, we transferred somebody who was working in utilities to the streets division, and the positions are in the utilities division.
Okay. And one of these is the police department, isn't it?
Yes, we're good with it.
You're good with this?
Yes.
Okay, I just like to hear it.
Do you mind? I'd just like to point out, it's a community service for the public. It's a community service officer, not a police officer.
Okay, right. That is right there. I didn't read that.
Well, I just wanted to make sure that everybody didn't. I didn't want to give the fire department the opportunity to say we took one of, swap badges.
They wouldn't do that. Questions from the left or comments? Trustee Rufato?
So for the overtime, we're saving, so just based upon, I know we budgeted $654,000 in overtime, which is right around, right now, like President Horker said, we're at right around $1 million for for this year. So it's, just to be sure that whoever's watching, we're not eliminating overtime whatsoever. It's just
No.
that it's being reduced by 400,000.
That's exactly correct.
Okay, all right. That was it.
Trustee Lang, you had something? Or
So year one is covered. Explain year two and going forward, how that works with the employee costs and pensions and so on.
I think it's a repeat of this year because we would have, the pension costs are calculated in the math that you see before you as far as the savings. The other calculations, that $400,000 savings would have been annually included in the budget, and those 3.5 positions which also have pensions associated with them, would have been included in the budget. So it really is no different in 2023 than it is in 2022.
Awesome.
Am I missing anything?
Thank you.
Thank you, Trustee Lang. Trustee Papantos?
Thank you. I just want to point out, as far as the overtime, this isn't just we're taking money from somebody who wants to earn overtime. We've been in a force-back situation, am I correct?
Do you mind if I come up?
No.
Come on.
We'd like it.
I mean, I take it a little personally that I guess I didn't hit it out of the park, but,
I do better on my feet, that's all I'm saying. But no, I don't have
Do you need
much,
to move while you're sitting?
other than what John had said. He stated it very well, and I know we've had discussions in the past. But to answer your question, it's important to note that this $1 million is spread out between 39 people. So we have 50 people in the fire department, 2 chief officers, 3 battalion chiefs, and 6 lieutenants. The lieutenants, they get overtime, but it's sporadic. So 39 people, if you do the math, this will just blow you away. Because, and you're right about the force backs, and I'll explain the force backs if you can for a minute. If you look to October 22nd, January, October 22nd, we're at 12,782 hours of overtime. Now, this isn't us sending people to classes. This isn't us doing all kinds of things. If you notice, we didn't even go to National Night Out. The people that you saw there were Steve and I, because I didn't want to force back people to go to it. I wanted to save it for Rock the Runway. We've turned down a couple of deployments to Louisiana, to Florida, through Mavis, on a call-out, which, we have a lot. We're heavy in special teams. Even though that's reimbursed, I didn't want to have to go and force people back because of the amount of overtime. If you take that 12,000 and divide it by...
Chief, could you talk, get a
I'm
little
sorry.
bit closer to the...
I'm sorry.
Thank you.
So if you take that 12,782 and you divide it by the 39 people, that's 13.5 24-hour duty days each. And that's on top of your 54-hour work week. And that, as we know, I had to average it out between all of them, but that's not the case. Some people wait to get forced back. Other ones will take it routinely. And we have people, you can ask Eileen, we ran the numbers the other day, there's 6 to 8 people that actually have worked 20 extra duty days. Now, that doesn't sound much to people. It's 20, 24-hour duty days. That's 2 months. There's 10 duty days in a month. So someone's working on top of their regular deployment, their regular schedule, 2 extra months. And I took it a little further only so that you guys, it relates to a 40-hour employee, because 24 on, 48 off, it's hard to relate to. So if you take that, just that 13.5, that means a normal person, I call them normal people, a 40-hour work week, that's 8.19 weeks of overtime that you would work on top of your 40-hour work week. Now, a lot of people, I can tell people out there now are going, man, I would love that because I would love to make the money. That's great. Those ones that were doing the 20, that's 12 weeks extra of a 40-hour work week on top of your 40 hours. That's pretty much every Saturday. That's your work until 8 o'clock at night, almost every week. And what that is, people, again, I can hear, oh, well, I'd like to make that money, but no. Because like John said, things suffer. The system breaks down. You can't work that amount, especially in shift work, which is proven, and especially with a high-stress job like public safety, whether it's police or fire. So you may get that new truck, but you're not going to enjoy that new truck because you're going to be living in it, and you're not going to enjoy that vacation because you're not going, because why? There's no time. And what did we find out? What's more important now than ever? Time. And we found that out through COVID. Yes, they'll work the overtime, these guys will work themselves to death, but that's what's happening. We're having injuries, we're having long-term injuries, we're having illnesses. Overtime is due to FMLA. So the overtime, again, it's just, we've reached that, we've well past that tipping point.
And I think that's what I was trying to point out, that this isn't a little bit of overtime we're trying to cover. This is, it's necessary, overtime is a fact of life. If an employee gets sick, somebody has to cover. This isn't just like, your work will be there tomorrow.
Right.
We have to have public safety. So this at least will give us an advantage to be able to have enough staff on duty at any time that the public is served as they expect to be.
You're exactly right. There's another component to this too, that, remember when we talked about staffing in Ambulance 42? Right now, Ambulance 42 is a jump company, which means they go between two different rigs. They stand at the ready between the truck and an ambulance. So it's not a full-time ambulance. So having this staffing will allow us to staff that Ambulance 42 exponentially more than we are doing now, which also means that, right now you don't have an ambulance at Station 42. It's over at 24. It gets confusing, but you just won't, this will allow us, there's more to an overtime component to this, there's an operational component to this.
Thank you.
Thank you, Trustee Papantos. Any other, Trustee Vito?
Yeah, what is the reason for the excessive overtime? I mean, it's just people calling out and then other people have to fill?
No.
Or why is there $1 million in overtime?
Sure. The way the staffing model is allowed now, we allow 3 people off. So if you look at the model now, if you want the slides. Sure. I have a presentation, let me just show the slide and I'll answer.
Luca, if you would.
I was rehearsing this, or we were talking about this earlier with Luca, and I said, well, what's the word? Is there a code word, or do I go like this? He goes, just say I have a presentation. I go, that's kind of anticlimactic. So right now, Trustee Vito, we have a 16-person shift, but we're at minimum every single day, 365 days a year, we're at minimum. And when I say minimum is because of the PTO and not including sick leave, every available slot is taken. We actually have surplus. We have to pay people back at the end because they can't take their PTO, their holiday. So right off the bat, we're at minimum staffing. So anything, FMLA, we've got, and it's not, you think it's going to be cyclical and this is just a COVID year. It's not. COVID, that contributed to about $75,000. We went back and looked at the COVID time and the other. 2020, we had a little bit more, but it wasn't as significant as you think for 2021. So there's anybody causing sick, long-term injuries, FMLA.
I'm sorry, define FMLA.
Yeah.
I'm sorry, define.
Federal Medical Leave.
Family Medical Leave Act.
Sorry. And that's basically, so we have personnel going through family issues, cancer, kids that are sick, and they take off. So we hire back at that time. Also, anytime you hire someone or add someone, there's a good chance they have to go to fire school or they have to go to paramedic class. So there's a lot of overtime associated with that. And again, we've seen this creep up. We've seen it creeping up since 2009. When back in 2009, we relocated some staff or restaffed the fire department. And then we went from the 4-off model to a 3-off model. So now we're at that 3-off model, but you're packing all that PTO in it. It started to creep up. So are you thinking next year is going to be different? We really don't need these people. It's not. If you look at 2019, we were well over 800,000 in overtime. So it's been exponentially creeping up. And so it's not a perfect storm, but it's going to continue to go up.
Thank you. Trustee Papantos?
Just one question. So we're going to hire 6 individuals. Do we have 6? Are there 6? What's the possibility of hiring 6 individuals right away and when?
Yes, we do. I think we talked about it. We're going to hire some right away, or at least start the process.
Yes, what we would, should the board agree, what we would like to do is start immediately the process of hiring 3. Doing 6 at a time, it's just too much. But what's most important, and if I miss anything, please fill in the blanks, we have a fresh list. And so if we move quickly, we can get the top candidates off of that list. And I think that's part of the priority of wanting to move forward now.
Right.
And I don't think that the idea of hiring 3 now, which meaning the current fiscal year, by the time they get on board, I don't think there's going to be any, there's not going to be any financial impact to doing it now. But we would like to start recruiting those 3 ahead of the 2022 budget.
I was looking to see if we had applicants or.
We're at the top of the list. We blessed it, or actually, the commission approved it less than a month ago. We hired 1 off of that list, so we have 5 or 4 in the queue. Some have everything, which is a good thing. Others are going to have to go to the academy, and that starts January 10th, I believe. So the timing is right. We'll get that started. So it's doable, but this will take a year in order to get through fruition for us to get all the things.
Thank you.
Thank you, Trustee Papantos. Trustee Rufato?
When you said that we wouldn't hire all 6 at a time, and I can understand that, but is that calculation of the overtime, is that taken into consideration a phased-in approach to hiring these firefighters? Because if not, then the overtime savings would go down.
Sure. It is because we were conservative on that 400,000. We actually think it's going to be more, but we don't want to officially say that in case we're wrong. So the answer is yes, because we believe we were conservative on this amount of savings from overtime.
Okay.
But you are right. The real opportunity to judge the numbers will be in probably 23, if not even more, because as the chief said, some of these candidates need to go to either firefighter and or paramedic school, so they won't be full service for a year. So it's going to be a struggle until everyone is up and running, but as far as numbers go, we believe we were conservative. Therefore, the answer to your question is yes.
And I just wanted to make it clear, too, that we understand the sacrifices and appreciate the sacrifices from the other department heads. This isn't about comfort. This isn't about convenience. This is truly about what's right for the public. We need to have the staff on duty so we could serve the public. It's not because we're tired. It's not because we're whatever. It is the public is number one in our eyes. And what's going on now, we need to change it.
Well, we've built, what, over 1,000 new residential units in the last few years? Something's going to happen.
Yeah, I'm just wondering, what's in your opinion like the perfect equilibrium with the overtime and the employees? Because now we're still at 600,000. I mean, is it financially and operationally better to have even more? I mean, at some point, when does that balance out? In your guys' eyes, in your eyes, I mean, whoever's eyes.
I think we're all going to have a different answer here.
Yeah.
I like it at 6. The chief would tell you it's 9 bodies.
Right.
Is that fair?
That's a fair assumption, but.
And if you're at 9, I mean, what does the 600,000 in overtime we're still paying go down to?
That's hard to answer without kind of going back to what Trustee Rufato said. I think we would be able to answer that question specifically in 2 years.
Okay.
Right. This allows us a buffer, but it keeps the minimum where it's at, so we can have people off and not have to hire back. Operationally, right now with this model, and at a 13-person minimum, we're at about 65% overtime, 35% operational. If we can bring that down, we would, but right now, this is the way we should go.
Oh, yeah.
Trustee Vogel?
Yeah, you're talking about phasing these in, like you're going to get 3 that are going to be ready and going to the academy January 10th? Or do you plan on all 6 of them being in the academy for January 10th?
No, again, it's a fresh list, so there's a good chance anyone on top has their certifications. We know the number 1 candidate has everything. He's plug and play, if he's still available. And then we would go down the list based on, we can't really pick and choose. There's a state law on how we can select our firefighters off the list. So it's, if some of them are taken, we move to the next person. That person may have everything.
Maybe reword the question. Do we expect them all to be on the payroll by January 1st?
No.
Okay, so this $768,000 is actually lower.
Yes.
I see one, maybe trustee Vogel, and the rest will be probably start a start date, January something. Their first day would be the academy
Okay,
in January, so they wouldn't be on the books.
Yep.
all right.
Back to, I mean, even a question that trustee Lang asked. These sheets are hard because we try to give you the ongoing, the real cost. But you're right, next year there will be savings in salaries that you will not see after that once everyone's on board. Chief said one, I mean, it would be great if we had all three on salary by January 1st. And then when do you expect to hire the other three?
I'd shoot for May, like
So
right
there's
before
5
May, so
months.
we're doing the fiscal.
The
with
value
us.
of 5 months for 3 people.
So that could be $150,000
Sure.
easy. Okay.
Okay, so are we good on 6 extra firemen over the course of the next year? Trustee Lang, that was a yes. Trustee Rafato's a yes. Trustee Vito's a yes. Papantos is a yes.
Yes.
And Mr. Vogel, Trustee Vogel, or I asked yes also.
Excellent. Thank you. We have, how many more? 3 more. The next one, I personally am very excited about. This is page 222. It is a request from Public Works for asset management software. As I said at the beginning when we talked about the review table for CD, asset management, yes, is something that we are doing, but we are not doing to this level. This level means the use of a separate proprietary system specifically for Public Works assets. And it is very different than the idea of just using a spreadsheet to count how many trees, how many fire hydrants we may have. This again goes back to the idea of letting technology work for us. This is a full suite of services that will allow the Department of Public Works to catalog every piece of data you can imagine. There's an example on the product's website of a fire hydrant, and within that one fire hydrant there are about 10 categories that get cataloged just from that single fire hydrant. The point there is that then that allows you to make data-driven decisions on replacement, on maintenance, on just about every aspect of what that asset serves. I like to point out that this is clearly expensive, but of the $89,000, almost $60,000 of it comes from the water sewer fund. So when we talk about general fund, we're at $30,000, which doesn't negate how much this is. But I don't know that I can emphasize enough how this will bring our department light years ahead of where it is when it comes to our most precious assets, which is, you know, every piece of pipe in the ground, every tree that we have in a parkway, every fire hydrant that we have throughout the community. The way this will work is, again, we're trying to be as efficient as possible. In order to let this software do its job, that means you have to input all the software. So in order to do that, just about every Public Works employee would be given an iPad, not a new iPad. As we buy new iPads, which we are doing next year for the board, the Plan Commission, and the department heads, all of the old iPads will be cycled down to Public Works, so we are not buying any new iPads as part of this initiative. They will then, every time they do anything, whether they're trimming a tree, whatever it is, they're measuring the diameter of the tree, they're assessing the condition, it all gets inputted, it all gets then put through and is part of GIS, which is huge, and of course part of the foundation of everything we do now. It's all address-based, location-based. And this is a great partner as we look to replace the village's ERP, which Enterprise Resource Planning tool, which we currently use, which is Penimation, which is our entire financial backbone. That's a different discussion for later. But they all work hand in hand is my point. And what we're trying to do is bring the village into 2022 and let technology work for us. Director Kaup, did I miss anything?
No, I don't think so. You covered it pretty well.
Just pretty well.
Fairly well.
I could read you the 4-page list of what
He's very
fits,
excited about this.
You sure you don't want to come to the podium?
Questions from my right, Trustee Lang.
Director Kaup, do you have your team on board with all this as well? Public Works, I worked there years ago in the summers, and, that wasn't a thing it was just to do the work, not to record everything, and it seems cumbersome, so how do you guys feel about it?
Sure, absolutely. Part of the process in us selecting the software that we have included in the budget right now was to have the entire management team, including the foreman, participate in the selection of the tool that we're recommending for purchase. That included working with a representative from the MGP, the GIS consortium, as well as everybody you see here today from our team and their frontline supervisors. Currently, the APWA just put out a survey with 54 Chicagoland municipalities responding. Fully 2/3 of those communities currently utilize some sort of asset management software. There's 5 or 6 suites that are the most commonly used. And while changing the manner in which we do business is always something that receives a mixed review from our line staff, this will help standardize exactly how they interface with the work that they're assigned, the manner in which we understand when they close out the assignments that they receive, and be able to better track how we interface with all of the hundreds of millions of dollars of assets that we have in the ground. So currently, yes, the frontline management staff, as well as the management staff that are responsible for our divisions, are comfortable with the decision that we've made, and they're looking forward to championing the use of it. Even if they don't fully understand it, it's definitely not something that we've interfaced with yet. So it'll be a new process for all of us.
Thank you.
Thank you, Mr. Culp. Trustee Papantos?
Just to add on to Trustee Lang's question, it seemed, I didn't realize how big this project was, that to input every tree, fire hydrant, how long do you expect for the data entry to occur?
Well, I think you have 2 components. The first is that large sum that is an upfront cost for the implementation that isn't included in the software licensing, that annual cost that you see. A lot of that is done by Cartograph. We'll also be leveraging MGP staff from the GIS consortium. They can do that a lot with the shape files that they have in our ArcGIS Esri map-based system. But as far as actually cataloging all of our assets and our infrastructure, that's a years-long process. That's not something that happens overnight. And it's labor-intensive. But it's one of those notions that if we sweat now, we don't bleed later. We'll have a good understanding of how to best make decisions over a much longer period of time than just, say, the 5-year CIP outlook. You'll be able to identify, let's say, closer to a full cycle of asset replacement. So for a water main, that's 85 years. If you can understand about when you'll have to be spending the big pots of money over the next century, it'll help us to make better decisions today so that we don't find ourselves in a trick bag after I'm gone, but for my successor or his successor's successor.
Or hers.
Or hers, that's right, yes.
Thank you.
Okay, so if there are no more questions, Trustee Vogel, we good with this?
Good.
Trustee Papantos?
Yes.
Trustee Vito?
Yes.
Trustee Lang?
Yes.
Trustee Rufato?
Yes.
Next up.
Thank you very much. The final request comes from the police and fire departments. It is funded through our E911 cost center. It is a CAD interface with Red Center. I will read the description, but quite frankly, I'm going to need someone from public safety Raquel, if you wanna, I'm calling you out, if you would like to describe it. It allows the bi-directional sharing of call data between police and fire dispatch. While the call is open, the use of this interface will decrease the call processing time, allowing for a quicker response time by the fire apparatus. I just broke the #1 rule of presentations by simply reading to you what's written there. But Raquel, could you put that in layman's terms, please? Thank you.
So first, let me describe how it works in the 911 center, because unless you've called 911 recently or in the last few years, it's changing, it's going to continue to change. The industry is changing, as well as the expectations of the public. So what happens, you dial 911, we answer the phone, 911, what's the address of your emergency? They tell us the location, and we also have to confirm the town. From there, we get the phone number. In case we get disconnected, we've got to be able to call them back. Then we ask them, what's the problem? What's the nature of the emergency? If it is police or, if it's EMS or fire related, we transfer them to Red Center, where they do the entire process all over again. What's the address? What's your phone number? What's the nature of the emergency? And then they start their EMD or EFD process, which is a series of protocol questions which helps them to determine the response or the nature of the response. That's a national standard that they go through, and it's all verbatim. So what this software is going to do is they're going to connect the Wheeling 911 center with Red Center. So as we're taking the initial call saying, what's the nature of the emergency, we're entering it into our CAD system. It'll automatically, what we call spawn an event, electronically and send it to Red Center. So they can start, just based off that nature, they can start a response without going through the extra minute and a half of going through this entire process all over again. One, it'll help, the response time, but two, Red Center and I have been working very closely the last few years. We have a shared telephone system, we back each other up, and this is just the next step in the evolution of our relationship. We got to get the response faster. The citizens are really expecting that. They don't expect, well, why are you asking me all these questions all over again? So again, it'll decrease the frustration level and increase the response time. Any questions or any other explanation?
Was that yes, you have a question, Trustee?
Just a comment.
Sure.
And I think you hit on it, the frustration level of, what's your address? I just told somebody, and if it's an emergency situation, the level of frustration grows, and to have to repeat yourself.
It's very significant. And a lot of times, when you're under an emergency situation or when you're under that type of environment, you can't think.
Exactly.
You're operating from a different, from the emotional level, and we get certain information, and some of this will be alleviated with Next Generation 911. We get certain information, but we can't count on that information being correct. It's paramount that we do this. When we transfer it to Red Center, again, they're under the same protocols. They have to do this. So by connecting us together, it's the next best thing for bringing fire home. So it's tremendous, and it's really a low cost.
Thank you.
All right, if we have no other questions, Trustee Vito? Yes. Trustee Papantos?
Yes.
Trustee Vogel?
Yes.
Trustee Lang?
Yes.
Trustee Rufato?
Yes.
All right.
Thank you very much.
That's the end of the book.
And just a reminder that since the board made no changes, that means that our budget as presented remains at the same value. So 2 more topics, both hopefully short, both also in your capable hands. First is the discussion on the 2022 property tax levy. As you've heard, we are experiencing a great year. Some of that comes from sources outside our control, and some of it comes from due diligence from the board and staff. It is staff's recommendation, as you've heard multiple times, to continue doing small incremental increases on an annual basis, but this is that discussion. So I will leave it to President Horker to poll the board and
Thank you.
have whatever conversation you need.
I'll go first on this one. Why not? I do think it's responsible to have steady, predictable, incremental increases. I don't like paying more taxes than I have to, but I know for a lot of our industries, they need to be able to calculate a budget and have something they can count on. I've actually been told that by businesses, and I know I like that too. I don't, I know we did a zero last year. I believe it would be wrong to do a zero again this year. I know I didn't vote in favor of it last year, of the zero, even though it was an election year. I would like to see somewhere around the 3.5% average that was noted. I know that would cover us for a few years, but it was also predicted that that would even fall short in a few years. But my view would be that 3.5% level of increase. Having said that, I will ask who would like to go next. Trustee Lang.
Yeah, I'd agree with that. I like the pay-as-you-go as we have been doing for some of these years. The large increase really does hurt people because not only are we increasing, but the other government bodies are maybe increasing as well. So it's really, some of those bills can really jump up. I like it slow and steady, and so I would go with 3.5, if that's the number, the magic number that we need.
Who wants to go next? Trustee Papantos.
Yeah, I'm for the 3.5 based on not only contractual obligations as far as employee expenses, but insurance costs going up, cost of goods just going up, our expenses are going up by more than that, so I don't think that's excessive in any way, shape, or form. I do think staff does an excellent job in keeping expenses as budgeted or under at all times, and there's times where I don't know how you do it. But I think overall that's fair and it's livable for people. If you look at the increases for Social Security this year, it's going up 5.9%. So I think 3.5 is justifiable that we need the amount of money to cover the expenses.
We have a few left. Trustee Vito?
Yeah, I think it's nuts to raise taxes. On $1 million surplus, now you're talking 3.5%. If Michael's numbers are right, that's another $600,000. We're gonna have a $1.6 million surplus after we didn't raise taxes last year and came out with a $700,000 surplus. I mean, why are we raising taxes? I know the explanation, but if you have to raise taxes with $1 million surplus, I mean, it's just commit yourself just to continual tax increases for even when it's not raining out. I don't know. If we're gonna, there's never not gonna be a tax increase, I guess. And if this isn't the year to do it, to not increase it, I don't know when ever would be, and it doesn't make sense to me. So I'm a zero.
I have absolutely respect your right to disagree with everybody.
Trustee Vogel.
I'm in between the two of those. With a 38% is what we said, we have 38% excess sitting back in the bank, looking that we need 25 as our policy. And the fact, again, that we're looking at a $900,000 surplus for the year without a tax increase. And this year, we're looking at a swing of, I don't know, is it 2.1 million? I just don't think even 3.5% is a lot. I'm looking at somewhere like in the range of 2% maximum. And I think we have to be good shepherds of the funds, and to pile away that excess, there's no reason for it at this point in time.
Do you have a number in mind, or do you just?
2%, I think, would be, cover us for any unforeseen problems or circumstances.
Thank you. Trustee Rufato, you're last.
I was just going to say what Trustee Vogel said, and because we're at a 38% on our surplus, we can bring that down a little bit and still be in a positive state. And actually, I'd be more inclined with no increase simply because of that. We don't. What would be the impact if we lower that percentage down to 30%? You know, our bogey for having a surplus. What would that impact on our budget? I just don't see it as Trustee Vito said. We're having this surplus and we're adding more to our, especially in this time, we're adding more to our burden onto our residents at this point in time. That's all.
Mr. Monshane, what would, you only have the slides that you have. That was a silly question, wasn't it? Well, I mean, you don't have any projections of variables on percentages. Well, we know a single percent increase is 168.5.
Right.
We know that we had a how many $1 million swing from the $700,000 projected deficit to the.
We went from $1.6 million deficit to what we think is going to be a $900,000, or I'm sorry, 600.
No,
$900,000.
So it was $1.3 million, Trustee Vogel, I think you said, right?
2.3.
The swing, 2.3.
This year's projected surplus is 700,000. So we went from 1.6 to 700,000.
So it's a $2.3 million swing.
Yeah. 2.3.
So what's our likelihood that if we did zero this year, again, that next year we're going to get socked with maybe 6 or more? What is that an unknown at this point, or is it a likelihood?
A likelihood in terms of.
Michael had there were two slides earlier. One that showed if we did zero, how the impact would be.
Yeah, I can put that up there.
And the other was, I think maybe to Trustee Rufato's point, if we do 3.5 every year, it only takes 3 years before we're back at a significant deficit. So I
That
think
was the one I was thinking about.
Those two slides illustrate the answers to those questions.
That one.
Here we go.
Wasn't it?
The one there.
Wasn't it that one?
Yeah.
Oh, everything's increased.
So, again, I mean, a no increase still produces a significant surplus next year.
But this is no property increase I can read for the next 5 years. Isn't that great?
Right. This is kind of worst case scenario from a financial standpoint. And then this is 3.5% a year. So again, this is all about what happens in the out years. It's not about the short term.
Okay, so it doesn't look like we would have a significant increase, at least next year and perhaps the year after that as well, if we stuck with zero.
If you stuck with the zero, I don't think you're looking at a substantial increase the next year.
Meaning that we'd have
That's
to
the next slide. if we
levy
stuck with zero.
6% or more, like we have big jumps in some of those years. We had huge jumps in our levy.
Right. I don't think a zero would produce a 10 the following year or something like that.
No, I mean, according to this slide, well, maybe go back to the previous slide to Trustee Lang's point where it's a zero. I mean, you'd need, if we just assume rounding up that 1% is $200,000, the answer to your question then is,
okay.
No for 23, yes for everything.
So zero levy on our part, what would that do for the residents?
It doesn't change, and assuming the assessed values of their properties don't change, which it shouldn't because it's not a reassessment year, all things being equal, they'd pay the same amount that they're paying this year.
Just for the Village of Wheeling. Just to be clear, it's just for the Village of Wheeling because every other tax
Exactly.
body is going to.
Just for the Village of Wheeling.
Yeah.
The
And we
other-
are only 13% of the bill.
We're only
Right.
13%. So the other taxing districts, I expect, will increase their levies by at least 1.4%, probably by 1.4% at the most.
Because that's their cap based on PTEL for this year.
Yeah, unless they went to referendum, which I don't think anybody did, they're capped at 1.4%.
Michael, when looking forward a couple of years, you said one more of the districts was closing down. Was that 2023?
Yes.
I mean, we're going to be talking about a 10% at that year, correct? Probably.
Well, we're going to be talking about some unusual increase to capture the new
To
growth.
capture it, but it's not going to have an effect on the
It's not going to
taxes
affect
people are.
anybody. So,
But it's going to affect our tax dollars that we're going to receive.
yes and no. I mean, you have to remember that in the South Milwaukee TIF, we're already declaring almost all of it as surplus. So it won't impact how much revenue we're getting because it's already coming back to us now when we declare surpluses. The need to increase the levy that year that the TIF ends is just to make sure that we don't lose money, not because we're going to get some kind of windfall.
Right. Okay, well, there'll be some small amount of impact because we're not paying out 100%, are we?
No, but we're paying out pretty close to it.
All right,
You know,
okay.
Pretty close to it.
All right.
So should we, in the years that there's reassessments, property reassessments, are those the years that we should be cautious about what we do with levies, or, and the years that it's not being assessed, like now, you know, the off times, that we, you know what I'm saying?
I know what you're
get into-
saying. Yes, I don't think we've ever really looked at it that way because the reassessments are not anything we can control, and we still need to bring in additional revenue. How that impacts an individual taxpayer just depends on their individual property value and whether it goes up that year as much as everybody. If everybody's property went up, let's say, in a reassessment year by the same amount, then the impact is, there is no impact. Where it impacts people is if your home goes up by 10% and mine only goes up by 2%, then more of the burden is going to be shifted to you. So I don't think there's no way to predict individual outcomes because that's up to the assessor's office.
But what happens when any resident gets their property tax bill, like we've known for years and years, it's that bill is assumed that it's from the Village of Wheeling, and it's, Village of Wheeling is responsible for all of the property tax bills that a typical resident is paying, and it's not true. It's 13.42% of, that's our share. And schools have their own, and so on and so forth. So it's always kind of pointed towards us that we're the cause of that property tax.
Right, I think people just assume it's all going to the Village of Wheeling.
And so just to reiterate again, you say that it's hard to pinpoint what an actual, if we do 0 or 3.5, how that will affect an individual resident.
If you're asking what the impact, I have a slide for that.
Isn't it like $17 or something?
Yeah, I guess I misunderstood what you were asking, so I apologize.
While Michael finds the slide, at 3.5%, if you have a $7,000 tax bill, the net impact would be $33.32. 4,000, there you go.
Yeah, here it is. So this is 3.5% on residential property owners.
But now the drawdown on our reserves, our personnel expenses are going up 5.25%, $520,000 this year?
Right, it's minimal compared to prior years.
Right. But I mean, but that's already budgeted into this.
Yes. Right. This is really, again, about, it's not about next year, and because this, for next year, it's about the size of the surplus, as Trustee Vito noted. What this is about, and the recommendation is about future years. Our expenditures have always gone up at a greater rate, or at least in the last 20 years, than our revenues. And so at some point, that gap is going to catch up with us.
Yes.
And so that's what this discussion is about. It's about years 3 through 5 or 4 and 5, not next year.
Yeah, but even
Can you-
even at 3.5% increases every year, even your own slide shows fire and brimstone in 3 or 4 years
Well, I
anyway. So
wouldn't
why
say
not
fire
live
and
today for once? I mean, we have $1 million surplus. If we're going to die, why don't we just live?
That's an excellent point, which is why the next topic are things like the push tax, because you're right, we try not to rely on the property tax, but that's the way this town was built. And quite frankly, that's why we had such a good year this year. There are many examples of other towns who rely on sales tax, and they're running huge deficits because, that's where they get their money. But to your point, right, which is why we're always trying to find other sources of revenue that do not come from property taxes. Otherwise, we're in that exact situation where even 3.5 isn't enough.
Can you go back to the slide where we had the increase each year, or we didn't?
I can find it.
Trustee Vogel, did you have something also?
No.
I'm sorry.
I had can we talk about the push tax first and shift that up in order and then come revisit this property tax?
We absolutely can. If I may offer a warning, we have no idea really what it would bring us. Our estimates are around $300,000. And the levy, and the answer is yes, we absolutely can. And remember that the levy is an increase, whatever you do this year is perpetual. So if you don't capture that money this year, it doesn't compound and it becomes then an even larger loss. But the answer to your question is yes, we can absolutely do that if that's.
Because it might be then more of a compromise to lower the tax levy and if there's another source of income like this push that we're going to discuss.
I'm just trying
Trustee
to.
Lang, hold on, we do have a question pending, and I don't want to get too far. I don't want to have too many directions open all at once. There was a question asked, is this the slide we were looking for?
Yeah.
Okay.
And that's what I'm trying to point out, is I'm trying to avoid these 9 and 11s hitting us because we were fiscally responsible in 2011 and said people can't afford any more than what they're currently paying, or if they have I don't know what years our reassessments had come in, trying to save them. We did the 0% last year, and I don't want to get stuck getting hit again. I mean, that's my fear, that we are going to be looking at 9 and 11, and if it's a year that we're reassessed, excuse me, I can't remember. I think it was 2 years ago.
19 was a reassessment.
18, so we're coming up.
So they should be doing it this year.
Next
They should be doing the
22.
evaluations and then.
Yeah, I believe.
We're going to get hit again if we're not careful.
Right.
Was 14 or 15 one of the years, though, that one of the TIF districts closed? And so we automatically up that percent to capture it?
It was 16, if
I
I recall correctly.
There's a note right here on the slide.
Right. It was.
It was 16 or 17.
The 5.5 and 19.
In 19?
Oh, 19.
Reflected a 2.75% increase in the levy just to capture the new growth from the Crossroads TIF. Otherwise, that year, the increase would have been 2.75.
Let's leave this slide up. Let's discuss the push tax.
Sure. I'll introduce it. Attorney Ferrello, if you can
Sure.
This
if
is
you can help
wonderful.
out.
We have to have a meeting tomorrow because the state legislature, in all of their transparency and open-mindedness, approved something, when?
Yes, so what we're talking about is a quote-unquote push tax, which is something that you may have seen in the paper, other communities looking at passing. Some debate as to whether or not that's legal is pending. There's been talk about you had to have this in place by June 1st of last year. I think what President Horker is saying is that the state legislature on Thursday night decided to draw a new line in the sand when it comes to this push tax, which relates to a penny per push on each of the video gaming machines in any community. And what they said is if any home rule municipality would like to institute such a tax, they have to have it on the books by November 1st, which means then if Wheeling is going to consider it and pass it, we would have to meet tomorrow in order to do so. We appropriately notified the meeting yesterday, and so we are all set should the board wish to consider this. So what is it? It is a penny per push on a video gaming machine. Who pays for the tax? There's a lot of debate, and please jump in here. Sure. There's a lot of debate on that. The bottom line and the easy answer, I think, is the winner pays the tax. That's the way we're kind of interpreting it, meaning the tax has to be paid by the terminal operator. However, they have the opportunity to pass that tax on to the player, but you can only pass the tax on to the player if they win. If they didn't win, you can't collect more money than they were gambling if they lost. Therefore, then the terminal operator is responsible for the tax, but they have the opportunity to pass it along.
It can be passed on. That's correct. I think the technology is unclear at this point on how it's all going to be collected, but happy Halloween. We have to pass this pass this tax tomorrow, or you lose the opportunity to do that. As John mentioned, that was determined on October 29th. We have drafted an ordinance that's consistent with other push tax ordinances that other communities have adopted. A push tax is an amusement tax. If you recall, we established an amusement tax in Wheeling right before the theater opened. Our amusement tax is at 4% of revenues. This is a subcategory of an amusement tax because it's one penny per push. So I have incorporated it into our push tax language. I'm sorry, into our amusement tax language, but the push tax is taxed differently than our typical amusement tax.
Which, if I may,
yes.
which just to be clear, we do not get 4% already. The amusement tax is 4% on bowling, theater, all that stuff.
Nothing to do with
just
video.
Want to be clear.
Video gaming is being introduced currently with this push tax into the world of the amusements that are being taxed in Wheeling. So we are prepared to move forward. Tomorrow, I just want to caution Trustee Lang, in terms of determining your tax levy based on this, I would express some caution there. There is a lawsuit pending. Oak Lawn is one of the first communities to pass a push tax. That tax is being challenged in state court in Illinois. That case has been pending since 2020. There are several arguments being made that a push tax, and I'll just touch on some of them. One is that a push tax is an unauthorized occupation tax in violation of the Illinois Constitution. There are some federal arguments being made relating to procedural due process for the terminal operators. There's some argument that this is an impermissible license. Where this lawsuit is going to go, it's hard to predict. It's hard to predict which of those claims might be successful, if any, but I would really caution you guys making a determination on your tax levy based on the thought that this is a definite. It looks good. I think you are going to, I do think it will survive, but crystal ball, somebody mentioned a crystal ball, it could get overturned. It could.
Who's filing these lawsuits?
The gaming industry, the manufacturers of the gaming machines. Those are the gaming companies are the main ones.
Yep. The biggest concern I have is, I don't want this to to penalize the business owners at all. And it shouldn't be, in spirit, it should be meant to the actual gamer is the one that is paying that tax. And I didn't look at it before as the fact that if you bust out and lose, there's nothing to collect unless you have Rocco working there. But that's not our case either. So it would just apply to those who, I'm in favor of it if it just applies to those who win, and we don't know that.
Well, when I say win, I mean either you, the gambler, wins or the house wins, right? Because if you lose, the house wins. So that's what I mean by it's paid by the winner.
Gotcha.
So to your point, sometimes the winner is then the business.
Yeah.
So that means they have to pay.
Okay, and so let's talk about the actual cost of this per push, because that's important to know. It's literally a penny, right?
Correct.
So that doesn't seem like a huge...
And it can never increase.
Yeah. So it doesn't seem like a huge...
That's correct. Once we establish it, what President Horker said, once you establish it, it can't be increased based on the law that got passed Thursday night. Well, the law's not passed. It hasn't been signed by the governor yet, but both houses have approved the law that says that it cannot be expanded.
And we're just opting in at this point, and we can make future change, or future, not changes, but a decision whether we would actually
Yeah, here's what I would
apply
say
this.
to that. The language in the ordinance you're going to see tomorrow at the meeting is that the push tax will become effective immediately, okay? Because it has to. And it will apply to all pushes that take place November 1st and after. But what I've said to the staff and what other communities are doing is they're effectively deferring the implementation of it to a later date. We have to have that November 1st language in order to comply with this law to make sure we don't get knocked out of the box for failing to do that. But we can send letters out to the establishments that have video gaming to explain to them that we're going to get to them with regulations and rules for the implementation of this at a later date. So that you'll see that tomorrow. I'm glad you asked that question.
Is that it, Trustee Lang?
Yes.
Thank you, sir. Trustee Papantos, then Trustee Vogel.
Thank you. So if I'm hearing this correctly, if we pass this ordinance, as of November 1st, everybody who walks into or sits down at a video gaming terminal, this does not include casinos, correct?
No, it's video gaming strictly.
So it's anybody who sits down there, if I hit the button 20 times, it's 20 cents.
Correct.
Doesn't matter if I come out ahead or behind, it's 20 cents that has to be paid. So are the operators or owners of the establishment, I'm assuming software is available, there's got to be statistics that count the number of pushes per machine. You know, doesn't matter who made those pushes, it's going to count it. Would they be able to pull this information out and then report it and pay the tax?
They're going to have to. The way the ordinance is written is that the establishments and the operators are the collectors of the tax. And they're subject to audit by our finance department, and they have to submit tax returns, periodically showing the revenues that are generated. So there has to be technology that gives us the number of pushes. In terms of how this is going to be implemented and how somebody who sits down and loses pays the push tax. I am not aware of that technology and how it works, but I suppose, I guess I don't even want to speculate. We'll have to see how it all plays out in terms of, we don't know. And this is coming at us very, very quickly. I can tell you this, the way the ordinance is written, it's designed to have the establishments and the machine operators pass the tax on to the players. That is exactly how it's run. It's a player-driven, like our amusement tax. It's very similar. Amusement taxes that the theater is able to generate by sales of tickets come from the patrons. It's built into the ticket price. Patrons pay it. The amusement operator collects it turns it over to the village. No different.
I mean, it's very interesting, because there's an old saying that says, Vegas wasn't built on losers. I mean, obviously, so the operators of the machine or the owners of the establishments where they're located are making money, and they have to build this into it. Because it varies. If you bet $1 and hit big, that's great. You don't mind paying somebody, a penny out of that. But if you've bet 20 and you don't hit it all, you're sitting there saying, and it's another 20 cents. Sorry, I don't have 2 dimes in my purse. And so I don't know how they're going to collect it other than taking it out of their net earnings.
Yes, that's probably their objection.
Well, and that's part of why, although the ordinance says November 1st, we wouldn't actually start collecting until, I would imagine the gaming industry and the state is going to figure this out and tell us how it's going to be. But they're only going to tell the communities that have passed an ordinance already how it's going to be. But yet this is very open-ended, which is frustrating on our part because we don't like presenting something that still has so many open-ended questions. But that's the expectation, is that the industry and the state figure out the details and tell us how it's going to be.
Well, and it's also interesting because it's really hard to predict what the revenue would be because you don't know how many pushes are going to happen.
Well,
that's dependent on the size of the bet and how much money you want to spend gambling.
It's not a push.
It's just
A push.
A push, that's what I mean.
But it's not the size of the bet.
It's not, that's what I mean, if you have $20 to spend on gambling and you make
One push.
one push, that's one push.
It's a penny.
Or if you make 20 pushes or 40 pushes, there's a big difference there, so it's hard to predict.
So municipalities are collecting this right now.
No, it's in place, but it hasn't been collected as far as I know.
Well, the article, I brought up the article from the Daily Herald, and it reads that during September 2021, Hanover Park took in $19,592 at 8 locations, unless that is just their revenue. It doesn't.
That's their share of the revenue.
So it doesn't include the push.
Correct. They have not implemented.
Oh, okay. I'm sorry.
That's
Okay,
correct.
so this is okay.
It's not, you're right, this is the article you're referring to.
Yeah.
It's not clear, but the answer is they are not collecting the push.
They're not collecting it. Okay.
We done? Trustee Vogel?
Yeah. Attorney Furlow?
Yes.
Is there anything in the gaming law or legislation that says that the odds are set ahead of time? I assume that the only reason they're suing is because they can't adjust the odds to make up for that push.
Yes.
Is that correct?
I'm not clear on the specifics of it, but the answer is yes, in terms of the regulation of the machinery. But what's the question about that?
If I'm an operator, I own the machines, can I set the odds on that machine? Or is there something that tells me what the odds have to be?
I think that's regulated by state law.
Okay,
There's
so
got to be
that's why they're
certain payout percentages that are required.
So they're not allowed to adjust it to make up for that push tax?
No.
So then it would go back, split 50-50 between the operator and the establishment?
Yeah.
Okay.
But back to the meat of the matter here again, the matter at hand is, so there's, aside from the fact that there's no way of collecting this up front, it sounds like predicting a yield would be even more difficult.
There are estimates that go from you will get 50% of what you're already collecting all the way up to 250% of what you're already collecting. That 250 sounds ridiculous to me. I mean, that's a lot of, again, a penny a push. And we collect $350,000 a year as the village's share from video gaming. It's a lot, that's a lot of pushes. I cannot imagine, more than doubling that. But you're correct, it is very difficult to predict. And on top of then the fact that this probably won't be implemented in any meaningful way until well into 2022, I think it becomes a challenge then if we connect this potential revenue source to the levy.
So then that basically brings us back to where we were. We should, if I may, and of course I can because I'm the ringmaster, basically we have to count on the numbers that we have in order to, the most responsible thing to do would be to count on the numbers that we have to figure out some sort of rate. I do see the point of a zero when we do have the surplus. I just don't want us to be pushing 12 in 2 years because all of a sudden there's, you know, COVID X.
Yeah, but at some point, I mean, we did zero last year, we were all gonna die. And now we're here with $1 million surplus again, so let's do zero again, and maybe we'll have the same horrible result. I don't know.
Keep doing the same thing until something
Right.
different happens.
Right. I have room for compromise. I said 350 and
3.5.
3.5, sorry, 350.
That's where you were at. I mean, if you'd like to do 350.
No, I would not.
That'll solve the problem.
So, I mean, I can, I mean, if there's a compromise in our future on this board, I can certainly come down with that number if it's necessary. I see both sides of the story here. I don't want to get into those 2015 large increases, but I also want to bask in the fact that we have a surplus.
What was your number?
3.5. So I would go.
We're at 3.5.
He hasn't given a compromise number yet.
That's, no, Mike, compromise, I don't know, you know, somewhere 2 or between 1 and 2.
So I would be okay with 2 as well. I know I'm going out of turn again. I mean, because again, you're talking about $160,000 overall, you're talking about $17. That was at 3% was $17?
3.5 is at $19 on a 4,000 tax bill.
Trustee Vogel, you introduced the concept of 2, so I'm guessing 2 would still be all right?
Yes, 2%.
Trustee Rufato? Is there have you had a change of mind or heart?
No, I'd still be at 0.
Trustee Vito?
No, I'm at 0.
Okay.
Trustee Papantos.
What?
Papantos.
Oh, I'm sorry, Trustee Papantos. I was actually just trying to go through my head. I missed somebody and I couldn't remember who it was.
Surprise. Yeah, I'm not as concerned about what the general fund is going to look like next year as I am what the general fund is going to look like in 2 years. I mean, you know, a surplus is a surplus, but we are going to continually whittle it down. So, I mean, I would accept 2. I prefer the 3.5, but I would definitely compromise to the 2 level.
This issue does not actually have to be settled today.
Well, it does by the fact that we have to prepare the paperwork in order to bring it back to you, but you are not making a formal determination tonight, if that's the question, today.
So we could draw up something, I mean, just given the results of this rough poll of the board, 2 could pass as it sits.
Yes.
Do we know where Mary Kruger is on this?
I do, but does anybody else want to speak? So that's not me.
I know she was.
I'm asking her right now, but.
We'll be getting a text message. She's probably, she was more than happy with the 3.5 or even higher, so.
Okay, never mind.
I would like to ask for a motion of of documents being drafted at a 2% to be finalized at a discussion in the future.
Discussion or approval?
Well, with approval, I mean, we've had quite a bit of discussion, I guess, I'm
Yeah.
sorry. But I mean, there will be more discussion when it comes up.
No.
No?
No. I mean, unless you want it. Typically, the way this works is you determine the levy today.
Yeah.
And we draw up the papers and then bring it to the board more for ratification, but you can discuss it then if you want.
I would imagine there will be discussion.
I'm taking that as a hint. So, okay.
I mean, we have at least one trustee who's not present. And I would expect trustee Vito to say something.
Only if it's on the consent agenda, I'd like to pull it
No, we
off,
would
'cause
not.
something was on, one time it was on the something was on the consent agenda that I didn't approve of, and then
We would never put the levy on the consent agenda.
Okay. I forget what it was.
Well, we were at, according to the vote, we were floating around 2 anyway.
You have 4 twos.
Yeah, so.
You have 4 twos and 2 zeros.
Excuse me, President Horker, were you a two?
Yeah,
I missed that.
right after trustee Lang spoke, I said I could see 2.
Thank you.
All right, so I'll make a motion. We prepare it based on a 2%.
Thank you very much, trustee Vogel. I need a second for that.
Well, this is just direction, just
Direction to
For the record.
prepare the documents.
I'll second.
Second, trustee Lang. You got something to do now, trustee Brady, or clerk Brady.
Oh, I do, thank you.
Do. There was a motion and a
Excuse me,
second.
I'm confused. What are we, is this a motion that,
It's a motion directing staff. That's
Right.
oh, so it's a
not
motion for
final
direction?
decision.
Right.
Okay,
Directing staff to prepare documentation for final consideration
thank you.
Okay,
at the level of
2%.
2%.
trustee Rufato,
No.
trustee Lang.
Yes.
Trustee Vito,
No.
trustee Papantos,
Yes.
trustee Vogel,
Yes.
President Horker.
Yes.
Thank you. Would the board like any additional discussion regarding the push tax?
Yes.
Trustee Lang.
This isn't exactly about the push tax, but it's something that is in line with gaming in general. I'd like to see a workshop going forward for the gaming cafes and where we stand with all that now. You know, our original, it's just sort of a level set. Our original plan for allowing gaming was to be able to help the existing businesses. And then it seemed like gaming cafes sort of really found a way to wedge themselves in. And maybe that's okay. But I wouldn't mind seeing a future, quick workshop on discussing where we're at with all this and if we're making good progress, if we should kind of look at the gaming cafes on an individual basis instead of a blanket, yeah, they're good to go, and see if it, because things are getting saturated right now. And again, it was to help the existing businesses thrive. And that's sort of where I want to see, are we on the right track?
Absolutely.
So if everyone agrees or folks agree that we could do that, I would love to see it. Doesn't mean anything, doesn't hold us to saying no more cafes, no more.
Discussion.
Just discuss it.
Do you want a special workshop for that, or could we just have that after a relatively short meeting?
Yeah.
No, it would be, it would be a discussion item.
meeting.
It would
Yeah.
be a discussion item on an agenda.
Awesome.
Let's do it next Sunday.
Okay. I got nothing planned.
Excuse me, I just want to clarify on the
Trustee Papantos, go ahead.
push tax. So if approved on tomorrow, the 31st, this would go into effect as of November 1st, but we probably would not see any revenue coming in until God knows when, but it would be retroactive till November 1st?
No, what I'm saying is, what I'm seeing is communities are deferring the implementation of this to a later date and preparing rules relating to the implementation with a true effective date of collecting taxes at the date of implementation.
Okay, so,
It'll be at a later time. I think the staff, in conjunction with the board, you'll have to come up with a date when that's feasible.
And we assume that would happen once the state figures it out.
Right, to get the structure in place in terms of forms, we're gonna have to develop forms, how to collect things, how to put it all together. It's gonna take a few months.
That's what I was
Yeah,
trying to
so-
get at. So, I mean, with everything that's going on and waiting for the state to provide whatever direction they need to provide, this could be something that wouldn't even go into effect until mid-2022.
Yeah, I think 2022 is at some point, maybe in the first quarter, mid would be the latest, be my guess.
But we have to accept it tomorrow.
Yes.
If we want to do
If
it.
you do not adopt it tomorrow, you will not be able to adopt it at all, assuming the governor signs the legislation in its current form. So this is really a preemptive measure that you're not alone. There are going to be multiple Sunday meetings across the state. I know Mount Prospect is meeting as well. So.
Well, that's important to point out, because, I mean, they, Thursday night,
Yep.
and then we find out about it Friday morning, and then you're required to have the 48 hours of public hearing notice. So, yeah, thank you, Springfield.
Money talks.
So just so everyone has the same expectation, this was the discussion about the push tax, then the expectation, and again, this is a question, the expectation then tomorrow is we come, roll call the agenda item, motion second. I want everyone to know that, even the public, that this is the discussion.
Yeah.
And tomorrow it's the voting and we're done. Okay. Wanted to make sure that
It's going to be
staff
a
was.
really short meeting, so if somebody's not here when this starts, you're probably going to miss it.
I wanted to make sure that staff was meeting the expectations. Thank you.
Any other questions or comments?
That's it from us.
Questions or comments from staff?
Nope.
Board? Left? Trustee Lang?
Well, just a quick, call out to our staff and departments and I, going around the community and you talk to people a lot, residents a lot, and complaints really have gone down considerably and praises are taking their place about our service. And that's a really good sign to hear. I hear a lot less complaints about, you guys did this wrong and this wrong, but there's more praises about how things are taken care of. And it means a lot. It means that we're doing some of the right things. The patience of the fire department for all these years that we looked to, they were asking for increased personnel, and we just couldn't do it. We didn't have the funding to do it. And the minute we have it, we did something about it. And thank you for your patience and your team, Chief. And the fire department, I want to say as well, the police department is, year after year, Chief Dunn comes in with yeah, I can do it, he can do more for less, and it doesn't decrease their service at all. And it's just amazing how, that can-do attitude, and he gets the job done, and, his department shines for it. So just appreciate everyone's work on making this community better.
Thank you. We appreciate that.
Thank you, Trustee Lang. Trustee Votto, Trustee Vito Papantos, Trustee Papantos.
Thank you. I just wanted to thank staff for giving up your Saturday mornings to listen to us, and especially the finance department. It's a great job, and to put this all together and make it understandable for us and anybody else who wants to read it. Thank you, because it's always great.
Thank you, Trustee Papantos. Trustee Vogel, we're good?
Nothing.
That means that we have nothing else to talk about, and Saturday's over. I need a motion to adjourn.
So moved.
Trustee Vito, second.
Okay.
Trustee Papantos? All in favor?
Aye.
Aye.
Aye. Thank you all for being here. It's a good meeting.
Well done.
Meeting.